Hi friends, IIT Bombay alum from different part of the world and fellow entrepreneurs. I am Devendra Agrawal, founder of investment bank Dexter Capital. It is my great honor to represent IIT Bombay, which also happens to be my alma mater. I joined IIT Bombay in the year 2001, the same year in which IIT Bombay Alumni Association was also founded. On behalf of IIT Bombay and IIT Bombay Alumni Association, I welcome you all to the second edition of FinTech Summit organized by IIT Bombay Alumni Association and brought to you by our title sponsor, FinIQ. Technology is taking over the world. In the year 2000, none of the tech companies were in top 10 companies by market capitalization. And today, if we see 8 of the top 10 companies by market capitalization are technology companies. In the last 20 years, as internet and smartphones have penetrated our lives, we have seen rise of technology companies, which are benefiting us immensely in our daily lives. FinTech has been arguably the most disruptive sector globally over the last decade, transforming the landscape of entire financial service ecosystem. And India has not been different. It's immensely benefited by rise of fintech sector. Indian fintech has been the torchbearer of this digital revolution. Multiple startups in different subsegments, be it payments, be it lending, broking, insurance, wealth management, have built multiple innovative solutions which are benefiting and impacting our lives on daily basis. India today has over 61,000 startups, and of these startups, around 10%, 5,000 startups are in fintech alone. Of these 5,000 startups, nearly 550 startups are funded, and of these startups, around 19 of them are unicorn. If you see total number of unicorns in the country, that's close to 88, and of these, 20% of them are fintech. That gives how strongly fintech as a sector have risen in India. 2 of them, in fact, Paytm and Policy Bazaar, listed on stock exchange just 6 months back, and we have 25 of startups which are soon to be unicorn or popularly known as unicorns. So what is this which is giving rise to the rise of entire fintech sector? There are 3 pillars from customer point of view which have given drive fintechs. A, better turnaround time. Second, accessibility of fintech solution to everyone. Third, great customer experience. Gone are the days when one would visit a branch or a bank to open an account, or would go to multiple times to a borrower to take loan. Fintechs today have made these transactions possible real time or in few minutes with just a few click on smartphone. Today, availability of smartphones and cheap data have made these fintech companies be able to go to every nook and corner of the country, furthering financial inclusion and democratizing financial services. Thanks to enhanced tech layers and improved service levels, fintech today offer a great customer experience. Today, we see people who are much older than our age using Google Pay, Paytm, and that experience is quite incredible, which allows these customers to come again and again, use this solution and increasing their engagement and retention. So from customer point of view, while these are pillars, what has really enabled growth of the entire fintech sector? So there are 3 key pillars which have really driven the growth of entire fintech sectors. First of them is increasing penetration of internet and smartphone or rise in digital natives. Second, any sector or company in sector require massive amount of capital infusion for growth of the sector. Thankfully, India as a country and the entire fintech sector have attracted massive amount of capital. And third, very supportive regulatory environment. Today in country, smartphone users are close to 700 million, and the growth in the smartphone user is quite massive. Every quarter, 25 million users are being added. In fact, the solution that which are fintech provided are even being provided on feature phones as well. Indian consumers are being more and more digital savvy, and they are extremely comfortable buying financial services online. It doesn't matter what kind of services they are doing. Maybe it's transacting on a bank, internet banking, taking a loan, renewing insurance, or investing in stock markets. Indian consumers are quite comfortable doing all kind of activities on internet or the smartphones. Second, the availability of capital have been quite massive for entire country, and fintech has been the largest beneficiary of this capital infusion. And that's the reason today, out of 88 unicorns, we have 19 unicorns which are in fintech segment alone. In fact, from 2014 onwards, fintech sector alone has attracted $20 billion in funding, which has enabled these fintech entrepreneurs to innovate, experiment, and also enable drive the funding towards growth. We have seen all cashback, and those kind of initiatives have allowed customers to experiment and also form habit and do regular transaction. The third, and which I feel is the biggest enabler to rise of entire Indian fintech sector, is the support from government or the supporting regulatory environment. If we see, government launched multiple initiatives like Pradhan Mantri Jan Dhan Yojana, Aadhaar, eKYC, Goods and Service Tax, Unified Payment Interface, which is known as UPI, Bharat Bill Payment System, Open Credit Enablement Network. All these initiatives have been launched by either a government enterprise or a regulatory body. If you see, in last 12-13 years, government has done massive amount of innovation in fintech. In fact, while it's largely private enterprises which have been innovator, I am very happy to say that Indian government and regulatory agencies have been innovator in fintech sector. If you see, NPCI was incorporated in 2008. Aadhaar was first launched in 2010. In fact, first Aadhaar card was launched on 29 September 2010. And since then, it has provided a very strong layer of digital revolution with 1.5 billion people registered on Aadhaar. If you see fintech, right? Fintech is a transaction where people are transacting their own money on internet, and people would be extremely hesitant to do that. One of the key requirements in banking system or fintech transaction is KYC. And today, APIs enabled by Aadhaar have delivered nearly 9.9 billion KYCs, making entire transaction pretty seamless and paperless. Today's Aadhaar KYC are not limited to just eKYC. They are also facilitate other services like DigiLocker, e-signature as well. RuPay was launched in March 2012, and India is one of the few countries which can claim its own card payment network. UPI, which was one of the key initiatives by NCPI, was launched on 11th April 2016, and it has been one of the biggest innovation driven by government India. If one see transaction UPI, they have leapfrog transaction facilitated by all other channels, be it debit card, be it credit card, or cash. If one see transaction in December 2021, the transaction facilitated by UPI recorded 4.56 billion transaction worth 8.27 trillion rupees. In the current, this whole innovation by government, the whole infra built by government becomes quite important in current geopolitical scenario where banning of switch system can cripple a country. Today, private enterprises like Visa and MasterCard pulling out a country can have massive impact on economy of country. It's great to know that India has built its own fintech infrastructure driven by government initiative. It's my great pleasure that in this second FinTech Summit, we would love to welcome our Finance Minister, Miss Nirmala Sitaraman, who would deliver a keynote shortly. Just quickly going through today's events, after Miss Nirmala Sitaraman's address, we would have a quick address by our sponsor FinIQ. After that, at 5 p.m., we would have an we would have payment panel, and after that, we would have an investment panel at 6 p.m. Tomorrow, we would have a keynote from SBI chairman, MD, Mr. Dinesh Kumar Khara. And thereafter, we would have a couple of interesting panels in InsurTech and lending. With this, I would once again thank our sponsor, FinIQ, who is our platinum sponsor. I would also like to thank our entire team from IIT Bombay Alumni Association. Lata joined us this year, and she's the CEO of IIT Bombay Alumni Association, and her entire team who worked tirelessly for over last couple of months to make the entire FinTech Summit happen. I would also like to thank a team of volunteers. All these volunteers are full-time professionals who have been working selflessly to drive, to make this FinTech Summit happen reality. Advait, Sudhir, Boss, multiple volunteers who are fellow alums and who have made this happen. With this, I'll take a pause and I would like to welcome our Finance Minister, Ms. Nirmala Sitaraman, to deliver a keynote shortly.
Set. Go.
1, 2, 3.
देवेंद्र जी मैम आ रहे हैं बस 1 मिनट में।
Sure. Hi, ma'am.
Namaskar.
Namaskar. Welcome to FinTech Summit of IIT Bombay. I'll quickly introduce you and then I'll hand over the keynote speech to you, ma'am. Hi, everyone. It's my great pleasure to introduce our Finance Minister, Ms. Nirmala Sitaraman. Ms. Nirmala Sitaraman is member of Rajya Sabha, and she's earlier served Defense Minister of India. She's only the second woman after Mrs. Indira Gandhi, who was also a Defense Minister and Finance Minister. Ms. Nirmala Sitaraman was born in Madurai, Tamil Nadu, and she completed her Master of Arts in Economics and MPhil from JNU, Delhi. With that, ma'am, I'll hand over the keynote speech to you. Request you take it forward.
Thank you, Devendra Agarwal ji, who's the summit chairperson, I think. Am I audible?
Yes, ma'am, you're audible.
Okay. For giving this opportunity to me to participate in IIT Bombay event. This event is focusing on the next fintech destination, India being seen as the next fintech destination. So I'm glad to be here talking about this, particularly at a time and in that year where in the immediate past 2 years, we've seen great fintech adoption by Indian citizens. It is that adoption which has made us feel that India is really reaching a crescendo in terms of fintech revolution, which across the board in the country, irrespective of the area or irrespective of the levels of financial literacy, let us say, people have adapted very quickly. Whilst the global average is about 64% of fintech adoption, India's adoption rate is at about 87%. And as a result, you can see the adoption rate being at this scale and at this level is also probably triggered by the pandemic itself. Because of the restrictions on the economy, restrictions on the movement of people wanted to somehow facilitate themselves. And in this, in a way, credit goes to the Jan Dhan Yojana, through which 2014 onwards, people have been brought to have a financial inclusion process, whereby they were given access to banking services, they opened an account, and to strengthen that, Government of India also made sure that the entitlements that they have can be directly credited to their accounts through DBT. So when DBT happened and the poorest of the poor also had some periodic amounts being credited to their account, they saw the benefit of being a part of the financial setup, and that itself made them realize that when they are in a formal financial setup, receiving in real time their entitlements without any pilferage or without any middlemen in the process, the temptation to be part of an effective Jan Dhan Yojana was seen, and people have used the temptation to get on board these digital platforms. The Prime Minister once very clearly said that I want to convert a challenge into an opportunity, especially in the context of the pandemic. As a result, now we find citizens being enabled to be able to do most of their banking functions through their mobiles in their hand. And the banking setup also has come to understand that banks need not be present everywhere, but there can always be a banking correspondent who moves around and enables the process. So more than 2 crore accounts were opened in Jan Dhan Yojana. Today, totally, there are 44 crores of accounts, and have more than 1 lakh crore as deposit in these accounts. The JAM Trinity, in other words, has become the most powerful tool through which people have adopted fintech. The Jan Dhan, as I said, Aadhaar, which enables a certain identity, and the mobile phone through which operations are happening, the JAM Trinity, as we call it, have actually been the first stage in the fintech revolution that is taking place in this country. So you find that the JAM has been a provider of some kind of a relief to the common man, but for the fintech sector, that's actually been the basis or the foundation on which a lot of things have been built up. The National Broadband Mission, will now very soon cover all villages in India. It'll have high-speed internet, and this can be leveraged even through the common post office or common service centers that we provide. And today, in the budget having been announced, I can say that many of these post offices are serving as payment banks, small payment banks. They undertake a lot of banking function because the internet is available, and also banking correspondents are going in the villages, and they are able to also function as payment banks, although they can't extend credit. Investment flows because of this framework, and this kind of a system has already been created. Investment flows into the fintech sector has also seen a record high in terms of fintech funding. Fund inflows in 2021 alone saw 200% growth compared to the previous year. Large deals have also been seen from early stage fintechs to the last or the late stage rounds. So it is not as if money comes in for one and not for the others, which are progressively up the ladder, but it is across the board. Money is available for early stage and the mature stage as well. Just in 2021, $9.03 billion was raised by Indian fintechs across 410 equity funding rounds. And this is up from where? Would you believe it? It's up from $2.83 billion across 303 rounds the last year. So we've seen a considerable scaling up of funds which are being raised by the Indian fintechs. Payments also topped the charts in attracting funds. Now, payment companies have received more than 4.11 billion US dollars and 46% of the year's fintech funds, which is good in terms of at least understanding that the payment banks are not left behind. 4 of the top 10 fintech investment deals in APAC in just the first half of the year 2021 have been from India. So the number that we are receiving are also significant. So as of November 30th, 2021, total fintech funding is around 27.6 billion US dollars. So this kind of a funding has also helped in better valuation of the fintech industry itself. Indian fintech industry has been valued at around 50 to 60 billion US dollars in 2020, and it is estimated to be reaching 150 billion dollars by 2025. 1 out of every 4 startup unicorns in India are from the fintech segment. Sometimes people do say other startups probably are not able to access that much funding, but the availability of funding has also helped fintech startups to really grow. And it's also important to note that among all the fintech startups in India, about 20 of them have reached the unicorn status. The department, the DPIIT, which deals with the startups and their recognition and their certification, have announced that they have recognized startups and their number is about 1,831, which belong to the fintech sector. 3% of the recognized startups are all in fintech. 43% of the fintech startups were recognized post the pandemics, hitting us. So the pandemic sets in, but the fintech have not stayed back. On the contrary, they've ramped up their growth. Also, India has over 6,300 fintechs, of which 28% are into investment technology, 27% into payments, 16% into lending, and 9% into banking infrastructure, and over 20% are into other fields. So they are also spread across different activities. And by fintech, we don't seem to make a single silo. There are several areas into which they are moving over. At the same time, the digital economy in India is being pegged at 85 to 90 billion dollars in the calendar year of 2020. And that which is pegged at that level for the year 20, calendar year 20, will see an exponential rise, and it shall increase to 800 billion by FY30. By 2030, they should be reaching 800 billion in the backdrop of increased internet penetration, rising incomes, and also the young Indian population. Government has made it easier in terms of smooth and easy access to the stock markets because of technology such as eKYC and also Aadhaar e-signing up have all helped the retail investors to come into the market. The total number of retail investor accounts has almost doubled from about 45 million as of March 2016. It has gone to 88.2 million by March 31st, 2021. So on every count, you're seeing the digital revolution enabling faster participation in every sector, particularly on the financial side. As per a McKinsey report, 10% increase in internet penetration results in an increase of 3.9% in GDP per capita. That's a very big number, very significant number, and the importance, therefore, of internet penetration is clearly highlighted and indicated. In the current budget, we have decided to set up 75 digital banking units. They may function from one place, but they may serve any number of districts, but we are also targeting 75 districts to be covered. And I guess the DBU, the digital banking units, will promote better accessibility of banking services, affordability, convenience, and also more control over their own finances for the customers by providing a one-stop digital banking account or digital banking center. I'll very quickly refer to the digital payments. Rapid growth has been seen in the digital payments. 23 crore transactions per day are happening, and that it is driven by the unique and secure interoperable unified payments interface, the UPI system. 23 crore transactions per day. UPI, the unified payment interface, has crossed 4.5 billion transactions in February, entailing transfers of more than 8.2 trillion rupees in value. So 4 billion transactions, 4.5 billion transactions in February, but the value of those transactions is 8.2 trillion rupees. It's also interesting that the mobile-based UPI payments and the biometric-enabled Aadhaar, enabled Aadhaar, and also the payment systems which have been linked to the biometric payment indicators, have also had issuance of debit cards to about 200 million rural households, meaning account holders. 200 million debit cards have been issued. With now the UPI going global and linkages with other real-time payments systems, instant low-cost payments across countries is just a matter of time. We already have in Singapore and also in UAE are RuPay cards becoming popular, and also this transfer of remittances are being speeded up. So there are benefits for the fintech getting deeper and getting into greater avenues for meeting the aspirations of Indians. India is again one of the first few countries which has announced a central bank digital currency, meaning the central bank to issue a digital currency. In 2021, a BIS survey of the central banks found that 86% were actively researching the potential for CBDC, which is the central bank driven digital currency. 60% were experimenting with technology and 14% were deploying pilot projects, which is, I think, it shows that the mental readiness to accept, if at all, the central bank comes up with some kind of a digital currency. In addition to the CBDCs have some clear advantages over other digital payment systems. Payments using the CBDC are final and thus reduce settlement risks in the financial system. Imagine a UPI system where CBDC is transacted instead of bank balances. As if cash is handed over, the need for interbank settlement itself then disappears. The RBI is currently looking at the benefits that it can give and the associated risks which are associated with the CBDC itself, its various designs and the forms, and also the various use cases and appropriate technology platforms are all being looked into by the RBI. I'm glad to say that our MSMEs have adopted FinTech solutions, whether it is for credit or for payments or even for accounting and tax filing. Government has recently launched the Open Credit Enabled Firm Framework and Account Aggregator Framework, through which I think this whole process will be made easy and also expedited. So before concluding, I'd like to say that a summary of all the recent government initiatives and regulatory initiatives in the FinTech area, which will serve as the foundation for India as the next FinTech investment destination, which is what you're talking about today. The UPI's 123 Pay, a recently announced measure. Recently, the RBI announced it. UPI, this is a UPI service for feature phones. And this service will allow 40 crore feature phone users across India to access payment services. RBI's new FinTech division, that's another one of those, let's say, foundation stone which will augur in FinTech revolution in India. Again, recently set up by the RBI, an internal FinTech department to focus to the area and innovation in the FinTech sector, and will also look at regulations concerning the sector as well. So the regulator, the financial regulator, RBI has already institutionalized the process of regulating FinTechs. BharatNet project. This aims to connect all the 250,000 gram panchayats by a high-speed optical fiber network. With 3.40 lakh kilometers of optical fibers already laid, BharatNet has reached 1.29 lakh gram panchayats already. So earlier I mentioned how high-speed internet facility itself can revolutionize financial inclusion. The GIFT City, or the IFSC, the International Financial Services Center in Gujarat, is a world-class FinTech hub at the IFSC in Gandhinagar, and it will further strengthen India's vision to make India a global FinTech hub. The other 2 points which I'd like to draw your attention to enabling this FinTech revolution in India are the KYC, which is the development of and also the rollout of authentication solutions, including video-based consumer identification process, digital KYC, digitally signed documents, and setting up of a central KYC database for all the regulated entities to use it. And lastly, e-rupee, a voucher-based prepaid contactless cashless digital payment solution provided directly to beneficiaries via a QR code or SMS, and does not require internet, smartphone, or an app, and most importantly, is person and purpose dependent. So it is very much dependent on the person and also the purpose for which he would want to use it. Transparent and also leak proof. E-voucher to extend the possibilities of direct benefit transfer as a program and societal transformation through digital technology, and this can happen dramatically. So in other words, everything which we think is critical for India to become the next financial or FinTech destination is being spiritedly being put forward and launched by the government. It'll be the bright minds from IITs who will have to give flesh and blood life to this whole framework which government is establishing. So the framework is all there. It's for all of us to use it and benefit India to become the best of fintech destinations. Thank you very much.
Thank you, ma'am. Thanks a lot for taking us through all the initiatives that government is doing. And we are incredibly thankful that government is not only acting as a supporting partner, but government actually in fintech sector has acted as a true innovator and entrepreneur by themselves by launching multiple initiatives and make our country on forefront of digital innovation in fintech sector. Thank you so much. There was a great session by our Finance Minister, Ms. Nirmala Sitaraman. I hope all of you enjoyed that. Now I would welcome Mr. Milind Kulkarni, who is founder and CEO of FinIQ. FinIQ is the world's #1 trading platform for OTC derivatives and structured products. FinIQ is our title sponsor for second FinTech Summit that is organized by IIT Bombay. As a key speaker, Milind will share his opinion about the ideas of flexible financial products, and that too with multi-dealer pricing to ensure how can a customer get best pricing and best product at the same time. Milind, over to you.
Hi everyone. Thank you, ma'am, Nirmala Sitaraman, for your inspirational words. And thank you, IIT Bombay, for hosting us for this wonderful event. Yeah, my name is Milind Kulkarni. I am representing FinIQ, which is a Singapore-started India-based fintech. It's a global markets, capital market kind of fintech, and we are present in 11 countries worldwide. Yeah, so I'm going to share my PPT in a second, and we'll get started. Yeah. Okay. Yeah, I'm going to share my screen. Okay, sure. Yeah. Hi. So, today's topic is FinIQ's experience with platforms for complex global products, best execution in OTC world, and bringing in the global markets perspective to India. Yeah. I would like to start with recent news, which was literally 2 days back, 9th of March. If you see here, HSBC launches online trading for structured products. So this is making use of their FinIQ platform. Yeah. So HSBC Global Private Bank, they are launching a direct dealing kind of a platform where the clients themselves can structure their equity-linked packages, OTC derivatives, and they can trade. Yeah. So this is something that is happening in the Western markets. Okay. Okay. And one thing I want to say, barrier to entry to these products is a big thing. Yeah. Barrier to entry to these products is a major factor, which actually stops majority of the IT firms to get into this area. So we are going to understand exactly what are the parameters, what are the reasons for which getting such platforms into market becomes a little bit difficult as compared to, say, consumer finance, payments, transactions, etc. Yeah. So the first factor here is tailor-made for individual clients. See, the metadata and the very structure of this financial contract required by each client itself can be dynamic and difficult to automate. So these products, they are very personalized, they are very configured, customized. So you can't possibly have a ready-made system that you would have for bonds or for an exchange or for stocks or funds or insurance used for such products. Yeah. So here, to solve this problem, you need to build a framework that is LCNC style. Yeah. LCNC stands for low code, no code. So these are toolkits. This is a framework which actually allows you to define products on the fly. So here it allows you to have new values, new parameters without needing any software change. Now, what we did, so we spent around 5 years in building this toolkit. We call it UCP, or user configured products. Yeah. So that allows exclusively solely configuration-based implementation of any product and any workflow. So you can create any insurance link product, FX link, equity link, fixed income link, credit link, all by yourself without having to rely on the vendor. Yeah. So you don't have to program. So that solves the first problem, which is managing the tailor-made instruments. Yeah. Now, the second challenge is best price guarantee. A single bank giving its own quote may not translate to the best possible quote. Yeah. Opportunity loss claims are likely due to non-best pricing being offered. So if you are shopping with a single bank and that is the only bank you know, and they quote you, so their quote potentially cannot be the best quote. There could be 7 or 8 or 9 more banks which would give you price better than your own bank. So what do you need? How do you solve this? So you need to establish a liquidity network or a supplier network allowing live tradable quotes from leading investment banks, market makers, and trading venues. Now, what did we do? So over the last 6 years, FinIQ partnered with 25 leading banks and venues worldwide to create was only best price platform for cross-asset solutions. Yeah. By cross-asset, I mean foreign exchange derivatives, fixed income, equity derivatives, and most importantly, structured products. Yeah. So there are platforms around the world only for FX, only for equity derivatives, only for FX derivatives. But there is no platform like FinIQ, which allows you to do all asset classes in the same platform, that too with best price guaranteed execution. Yeah. So that is two considerations, 2 parameters we address: the tailor-made products and the best price requirement. Yeah. Now the third requirement, which is suitability and compliance. So suitability and compliance is a must thing. So client suitability and regulatory compliance, if not adhered to, may lead to potential legal risks and mis-selling claims. Okay, so how do you address this? So you need to accommodate all possible validation rules in most parametric manner, not losing time in software change. Yeah. So you can't be having a new rule introduced by the central banks and then you take few months to implement it. So typically that would mean you are in a breach, or you have to forgo your license, or you have to run kind of a risk, you have to take dispensation. So time to market is a big thing in today's world. So if you can't adhere to your regulations, your internal, external suitability rules, you practically cannot offer that product. Now, what did we do? So post 2008 global financial crisis, extremely tough compliance rules were mandated, which gave FinIQ unmatched insight and helped us build our pre and post trade functionality. So we had lots of clients. Yeah. So in 2009, 10, 11, as the regulations kept on coming, we had to accommodate. So we accommodated around 50 different rules. Yeah, all using parameterized UCP framework. And today, if there is a new compliance or suitability rule, we can simply turn on, turn off something that exists or configure something new. So that is the third factor. So tailor-made products, best price guarantee, and suitability compliance requirements. Yeah. So now you have overcome these 3 challenges. The next is probably the most important one. Okay. So the next one is need to distribute it to retail. Now, if you have invested so much in having this multiple banks on your panel, all the regulations matched, products are being tailor-made, you can do combinations. And then if you roll out only to handful of customers, yeah, you only have 9,000 clients or 10,000 clients. Yeah. So it doesn't do justice to your infrastructure. And secondly, you are letting go a huge opportunity to offer these products to the tier 2 clients. So what you are offering to ultra high net worth individuals, you could offer to HNIs. What you are offering to HNIs, you could offer it to mass affluence. Whatever you are offering to mass affluence, now you can offer it to mass market. Yeah. But what is stopping you from doing that? So simplified user interfaces that suit each user profile and workflow. So whether it's B2B, B2C, B2B2C, yeah, you have to cater to all of them. Smart pricers and solvers is a necessity. You should be able to solve things, price things, work out backwards. You give your budget and the product is constructed based on your parameters, constraints. Yeah. So you have to have simplified user interfaces where you are not showing those 35 different fields that make the structure or the product. You have to show something like 3 or 4 primary things, lead the client to the ultimate complexity with all kinds of what if analysis, simulations, risk disclosures, term sheets, documents, etc., etc. Yeah. So selling complex products is an art. Yeah. You can't just keep the entire thing in front of the client. It's very intimidating. Yeah. But with technology, you could build those journeys and you could make it as simple as buying a bond or a mutual fund. Okay. Now, what did we do? So FinIQ built both API as well as GUI based dealing tools that power Angular, React, .NET, email, Excel, iPhone, Android apps, effectively allowing even the end client to deal directly. Yeah. And that's what we saw in the HSBC Global Private Bank press release, that the end client can self-construct or self-direct his own product and trading decision. Yeah. So this is how this entire barrier to entry, all these constraints were overcome by FinIQ in last many years. Yeah. And we have reached to a stage where we can probably claim that complexity, if it is addressed, if you solve complex problems, they are far more rewarding than solving simpler problems. Yeah, you are more sticky. Your solution is more recognized, and there are various other benefits. Yeah. So now few facts and figures about FinIQ. So wide array of products. So we offer things like foreign exchange, spot, forward, swaps, NDF options, strategies, target redemptions, accumulators, structured notes, stocks, simple shares, interest rate swaps, CDS, bonds, bills, mutual funds, insurance, Lombard credit, so on and so forth. Yeah. In terms of price provider panel, made up of leading IBs. So this is what I mentioned earlier, the best execution. So only if you have connectivity to banks, you can get the best price. Yeah. Otherwise, you get only one price at a time. So we are linked with Goldman Sachs, Morgan Stanley, JP Morgan, Citibank, RBS, RBC, HSBC, Barclays, and various other banks. We offer end-to-end functionality. So again, complex products, if you just automate the sales process, it is not adequate. You have to automate risk, documentation, and almost every single thing. Yeah. If any of these processes is not automated, is as good as nothing is automated. So that is something that we have to remember in the context of complex products. So end-to-end functionality, request for code, order management, trade execution, documentation, valuation, settlements, post-trade lifecycle, accounting, reporting. Yeah. So all of it has to be done in a very, very specific manner pertaining to that particular product. You cannot approximate, you cannot model it as a bond or mark it as a security, you can't do that. You have to handle it the way it is. So end-to-end functionality. Again, it takes years and years. So you have to have clients who give you insights, and that is kind of worked in our favor. Yeah. So we have 50 clients. We have exactly 50 clients worldwide, actually. So the first client we signed was in Singapore in 2003. Then we added leading banks from Hong Kong, Taiwan, Macau, Switzerland, Germany, US, Canada, UK, Spain, Australia, Indonesia, Malaysia, Thailand, Philippines, UAE. And in 2022, we signed our first client here in India. So we signed up with Kotak for retail bonds. And then we signed with another broker for pure wealth and stock trading. Okay, so coming to some kind of a recognition. So we hold the world record for trading the largest platform traded volume for complex products. So last year we clocked $60 billion of volume. This was across 20 different buy-side banks, wealth managers, and they traded with around 15 different sell-side banks. So you have 20 buy-side banks, distributors, wealth managers, sourcing products from 15 different liquidity providers or the sellers, manufacturers, and they all transacted through FinIQ, and the notional was around 60 billion. One must remember a specialty of these products. These products being complex products, they usually fetch anywhere between 1% to 3% commission, sales commission. So unlike foreign exchange, spot forward or stocks, where the brokerage commissions are very thin, these products, they earn you 1% almost guaranteed. So that is the beauty of this. And these products are probably concentrated only 2 centers, Singapore and Hong Kong worldwide. There's of course business in Switzerland or UK, but most of it is in Singapore and Hong Kong. Singapore and Hong Kong are on the forefront of the wealth revolution. So FinIQ is a global markets fintech owned by Indians, managed from India. Yeah. So we are owned by Indians, managed from India. So I'm going to connect it to my next theme, which is the next slide, which is India. Okay, now how do we link it back to what we have seen so far? Now there's a news I Googled up and I just got this UBS theme. So UBS opens its 5th office in India, close to 1,000 staff recruited. Now you see UBS has 5 offices in India. I don't think they have 5 offices anywhere outside Switzerland. Yeah, not in US, UK, Japan, Singapore. So they have 5 in India. Now you would have JP Morgan having 5, Goldman Sachs 5, everybody, Nomura, Barclays. So you have so many of these banks who are present in India, making up lakhs and lakhs of professionals working from them. So there lies the magic. Now what is it? Now global banks have moved majority of the IT activities to India, leaving behind very low critical mass across their global offices, limiting capabilities to innovate from those locations. Okay. Now this was not the case 2 decades ago, when the majority of the global financial market tech skills were concentrated in either London, Paris, Zurich, Geneva, or New York. Yeah. Now it is imperative the next global market tech innovation should come from India, and we can make it happen. Okay. Now there remains one choice. One thing needs to be seen, that is whether it is done by an Indian name or a global name. So which means the innovation comes from India, but it comes from Bloomberg India or Reuters India or Citibank India, or it can come from a firm which is founded in Bangalore or Pune or in Mumbai. So it can be an Indian name or a global name, but it has to come from India because there is hardly anything left in terms of concentration of brains outside India. Yeah. So I want to organize this in 3 parts. This problem or this model. First is the Indian products, present and future. So Indian products essentially made by Indian brains from India. So the timeline we give it is 2020 to 2050. The products are homegrown. Okay, the IP is all in-house, India-centric, based on Indian market local needs and retail-centric. So mutual funds, insurance, or payments. So it's a stabilized IP, stabilized products, and mainly implementations are going on right now. Yeah, and these are all developed by Indian firms. Now, number 2 is the global products. Okay. Now let's give a timeline of 1990 to 25 because this is where I kind of read it. So these products are made by international and Indian brains worldwide. So when these products were being made in whichever places, whether it's Philadelphia or in Oxford or in Paris, a lot of these people who made this possible, they were all Indians, but located there. Okay, so these are internationally evolved IPs based on needs from major global centers such as Tokyo, Japanese banks, or from Brazil, or from Swiss banks in Zurich, so on and so forth. Yeah. So IP was built long back. Those who follow capital markets industry, they know bulk of this innovation happened in 1995 to 2000. So most of the systems are now in legacy stage. Many are in end of life in most cases. The systems are so complex that you dare not to rewrite them. So you don't change the framework, you just leave it as it is. Yeah, because your entire trading floor is using that system. So not many dare to replace this. And these are all developed by Western firms. Now comes the opportunity area. Okay, so number 3, global products. So that's the future perspective from the year 2025 to 2050. Now, these products can be made by Indian brains from India in India. Okay, so you typically would re-engineer from the existing platforms, but implement it 10 times better because now you have better frameworks, better understanding of workflow. You know what is B2B, B2C. You have mobile apps. You have APIs. It's more scalable. You can go all the way to mass affluence. So the opportunity that did not exist 20 years back when these systems were made and they were kind of forced to operate under the retail circumstances just by putting more hardware, that is not there. If you re-engineer, rewrite it, make it fresh, it is going to be lasting for next 30 years. So it's a fresh opportunity. It's an opportunity out of complexity. As I made a claim, any opportunity that arises out of complexity, it lasts longer. Now we need to accelerate. Now, what is the strength? What is our advantage? Our advantage is hundreds of thousands of IT professionals who now have exposure to global markets sitting here in India. So Pune is like mini Zurich, Mumbai is like maybe mini Frankfurt, Gurgaon is like mini Japan. Every city is now representing a global bank in terms of 10,000, 20,000 headcount. There are people who understand the regulations in Canada, in Brazil, they understand insurance, selling models in Europe. So there is a lot of insight that has been gained through this relationship with the Western markets, but business being transacted, managed, supported from here in India. So only thing that we lack in India is the client contact. So we don't get to go to places like in Singapore, you would just walk down the street in Raffles Place or in Hong Kong Central or Canary Wharf, you meet 3 or 4 clients and you have a direct contact. So that is kind of missing, but then there lies the next thing. So government is bringing in the Gift City. Gift City is going to give us that access. So it's a step in the right direction and at the right time. So possibly it will allow complex products on India's shore, initially to a limited class of investors. Like Hong Kong, they do only with professional investors. Singapore, they do with accredited investors. So even though in Singapore, Hong Kong, all these products are allowed, they are not allowed for everyone. They are allowed only for the AIPI kind of clients. Yeah. So, that's how they ring fence the risk. So giving our bankers actual client facing exposure, grooming them to compete with the bankers from Singapore and Hong Kong. So that's how the financial and IT hub. So the IT part is already happened through our, UBS and Morgan Stanley and JP Morgan presence here in India, creating lots and lots of skilled brains, as well as people returning from the West. And the client-facing knowledge that was kind of lacking, that is also going to come through the Gift City route. Yeah. So I think it's all set for the next innovation coming from India. And I would like to stop here. And probably any questions you could post it, on text. Once again, thank you. And it was really a pleasure to have this conversation and have it exactly after Ma'am Sitaraman's conversation. Yeah. Thank you once again.
Evolution of digitalization of trading in capital markets industry can be understood by these phases. Both simple and complex products followed voice trading. Simple products became electronically traded in 2005, whereas complex products became electronically traded in 2020. FinIQ turned opportunity out of complexity. FinIQ is a global leader in capital markets technology and financial product distribution space. We cater to price discovery, order management, best execution, compliance, suitability, documentation, wealth management, custodian, statements, valuation and post-trade lifecycle requirements of over 50 financial institutions. Our platform is truly cross-asset and supports 12 major asset classes including derivatives, structured products, swaps, funds, bonds, cash equity, cash FX, and insurance. It provides extensive connectivity with 25 banks on our liquidity panel. We are the industry standard with 15,000 bankers across 21 countries using our platform to electronically trade financial instruments. FinIQ holds the world record for multi-dealer platform traded volumes which crossed $60 billion last year, which was for electronic dealing of some of the most complex structured and OTC products. Technology of yesterday could only cater to B2B for automation of financial products distribution. E-commerce apps revolutionized various other distribution models, resulting into democratization of these products. FinIQ took complex end of capital market spectrum and catered to the new distribution models. Every market participant, regardless of net worth, can now access same product on equal terms. Our platform provides right mix of in-house prices and best execution via single dealer and multi-dealer network.
Thanks, Milind. That was a great session. And it was lovely to know all the things that FinIQ has been doing, and you have built FinIQ as one of the leader in this segment. Thank you very much to join us, enlighten us, and also sponsor the FinTech Summit second year in the row. So thank you so much for that.
Thanks. Yeah. Thank you.
We'll soon be starting with our next panel. The next panel would be on payments. It will start short while in a few minute time. So allow us a few minute time, and then we'll start the next panel. So in a couple of minutes, we'll be starting the next panel. We Ashish. Ashish is from Lightrock.
Hi, good evening, everyone. I can see Karthik is already here. We're waiting for Raghu to join this room.
Hi, good evening, everyone.
Good evening, Karthik. Karthik, we can see you well now.
Awesome.
Great. Do we have Raghu as well? Not yet.
Hi, good evening, everyone. We also have Raghu over here. Correct. So welcome to FinTech Summit 2022, presented by IIT Bombay. I'm Ashish Garg. I'm the host for this particular session, which is on digital payments in FinTech. And with me, I have two very senior industry leaders on panel. I think we'll cover a bunch of topics in this space, right? But before doing that, I'll request both Karthik and Raghu to maybe take a minute to provide a little bit more background about themselves. Over to you, Karthik first, and then maybe Raghu.
Thank you, Ashish, and thank you to the IIT Bombay team for inviting me for this FinTech Summit. My name is Karthik Ganapathy, and I am an IITB graduate. I graduated out of IITB way before a bunch of you. So that was around 89 to 93. And post that for about a couple of years, I did my MBA from IIM Bangalore. And then after that, jumped into a mainstream financial consulting service, which is Anderson, for about 5 years. And early up in 2000, when the word fintech wasn't really invented, is when we started BillDesk. And if at leisure, I can perhaps run through what were the thoughts in our mind at that point in time and how it is morphed over today. But for the past 20 years, I've been basically in the forefront of the payments world, dealing with banks, financial institutions, merchants of different kinds, small, large, innovating with fintechs, partnering with many of them, competing in a different situation. And here we are, at the end of 20 years, we run a fairly successful business. BillDesk has been a pet project for many years, and for a good number of years, there wasn't much that we were doing. But yes, in the last 8 to 10 years, there's been significant traction, yeah, that's how it is. Thank you, everyone.
Thanks, Karthik. No, I think we'll cover some bits of your journey, and we'll definitely absorb some of your wisdom, which you've gained over the course of last 20 years. Right, Raghu, over to you.
Yeah, thanks, Karthik. Inspirational. Thanks, Ashish. Raghu, I have a longer name than Karthik. Raghunath Ganapathy Subramanian. So, it's very unique combination. I am a second generation IT person. My father was the first generational one. I had the opportunity to learn coding when I was in my 6th or 7th standard, and started my journey as a software engineer and grew through the ranks. Significant portion of my career has been being a buyer and seller in the enterprise software. I was working with a company by name EXL Service as their global leader for automation and robotics, exited and joined Hexaware as a chief technology officer. Then joined this beautiful organization by name UiPath, the global leader in robotic process automation and artificial intelligence. I joined this company when this company was having around 15 people globally, less than $1 million in valuation, less than $500,000 in revenue. Fast forward 5 years, together, I joined them as the president and CEO for India and APAC, was part of the global exec team, and worked with the team and saw through a successful listing in New York Stock Exchange valued at $40 billion. So 5 years, 1 million to 40 billion, seen the amazing journey that every startup aspires to be. So the theme that we keep is believe in the impossible and believe in the invisible, right? I've been seeing almost 300 to 500% year-on-year growth operating across all the countries pretty much in the world. So one of the theme I got from there was how to focus on wealth creation for others. So that has been the passion. Created my family office 2 years back, which operates out of Dubai and India. I have around, the name of the family office is OneDigi. Have around 11 companies in the portfolio. If you include UiPath, there are around 3 unicorns, then Sunicorns, as you call it. Very nice investments like a company by name British World who are into solid state and lithium ion battery manufacturing based out of Northumberland in UK. Then a company by name Simple Energy, who is setting up the largest two-wheeler EV factory in the world, making India proud again. And that's how I got in touch with my current organization, Actyv.ai, where I was one of the first investor. And I thought there is a significant amount of traction and benefit this particular company has, and I thought that's the best way to jump in and help. My passion is to help entrepreneurs become unicorns, and unicorn means not just my wealth maximization. It's about the 500 to 1,000 families that these companies have, and how these people can see wealth way beyond the salary income they make, and how they can help in the change that India really wants. So that's a journey so far, Ashish.
I'll take quick opportunity to introduce Ashish as well. So Ashish is an associate director with Lightrock. Lightrock is one of the leading fund in India which invests in multiple sectors. And Ashish leads fintech and financial services investment on behalf of Lightrock. Wow. Prior to Lightrock, Ashish worked with Washington DC-based fund SCEF. Ashish is also fellow alum from IIT Bombay. Ashish, over to you.
Thank you, Devendra, for kind introductions. Right. So without wasting too much time, what I will do is I have a bunch of questions basically for the panelists, right? And I'm actually excited myself because the last panel which I hosted for IIT Bombay Alumni Summit was on new banking, right? And 7 months fast forward, we ended up investing in one of the leading players in new banking space, right? So today's topic is also something which is very close to me. It is in payment gateway space, and though we've not made any investment over here, but we believe that payment gateway, as the name says, you are practically the gatekeeper, basically from where the capital is going in and coming in, going out and coming in, right? So you have a lot of visibility with respect to how the businesses are functioning. And there is a lot of things which one can do once you have access to that kind of data, right? So I have a bunch of questions basically for both you and Raghu, for both Karthik and Raghu as part of this conversation. My first set of questions are primarily for the audience. This is, given both of you have seen this industry over the course of last 2 decades, how this has evolved, right? And more recently over the course of last 5-6 years, especially post the data becoming cheap with Reliance Jio coming into the space, and then with demonetization, and on top of that, with COVID, right, which further accelerated the use of digital payments, right? So from your perspective, how have you seen this industry evolving over the course of last 5-7 years? If you can spend a few minutes explaining everyone about that. Any one of you can take a crack first.
So, see, we all look for the Western world to see how the entire landscape has changed, right? When I look back, I was discussing this specifically, the meeting today that we are having with my team. What came was even this very, very small and minute innovation that we have achieved in India as a country in last 5 to 7 years has been truly phenomenal, right? One of my team members said this and I really liked it, my co-founder and CTO. See, once you go to the remotest of the village, assume that person is selling a sugarcane juice. Okay, you can find the QR code that he keeps in that sugarcane crate for payment. That's a true inspiration how India has evolved. There could not be influx of other technologies there, but there is real payment penetration technology that is happening, which means every nook and corner of this country is going through this transformation, which is the beauty of this country. We only look at the transformation and the journey that is going on in the cities, but the true transformation has already started happening, right? And also the direct transfer that the government initiated, where every benefit the government is giving is going to the end account of the citizens of India. It's not about cutting off other chains or lowering of corruption. It's about bringing most people who are not in the banking sector into the banking sector so that they can get the benefit and upside of the digital world. So these two, I feel, and there are many more examples, but these two, I feel, have revolutionized the way I see things as.
Yeah,
Correct. No. Yeah. Sorry, go ahead, Karthik.
Sorry. So truly, like Raghu said, right? In 2000, when we really started off on electronic payments, the world was very, very different. And at one level, the question was, what is it that you could do that could actually make money? Because in those days, money was not so easily available, and people would not trust a bunch of people who have just exited their jobs, however cushy it might be. And the whole ask was that whatever model you have, when is it that you're going to make money, and how is it that you're going to make money? So I still remember those days that the conversation around discovery, analysis, getting people the right advice, all that did not have any did not bear any merit with any of the people who were talking to us. But the moment one started talking about transactions and said that here is a model where whenever a customer is making a payment, a successful payment at that, there is a fee, a cut that can really happen, and that kind of a model can work. That is when the first set of people started listening to us. And from there on, if you ask me how India has grown, the whole month used to pass with no payment. And then the only payments that would be there in those days would be a single one of the co-founders, Reliance Energy, now Reliance Energy, but Adani Energy, but earlier BSCS payments, which was set up in a automatic payment mode. So the first 6 to 8 years, really from a India payments perspective, was all about the basic banking infrastructure getting in place. So there were internet banking was basically set up. in a very, very concrete manner. And IRCTC was a major catalyst. So every bank that wanted to do online payments or electronic payments would first target to see how it could get onto the captive IRCTC site, and therefore their customers could start using the online payment services that were there. Then I think from at least India perspective, 2009 was a very, very important point, because that is when the RBI settlement framework and intermediary definition, they recognized merchants as a category. So all these got defined. And very soon, the Reserve Bank brought in the two-factor authentication guidelines, where they mandated that all online transactions should be accompanied with a two-factor for security and convenience of the cardholder perspective. That, to our mind, actually propelled a wave of payment and digital adopting, because the next 3-4 years, the card companies really pushed hard and got a lot of the debit side of payment method into the ecosystem. And really by 2012, 2013, you could see that India had a bunch of payment methods. You had credit card, you had debit card, and you had a large base of customers actually adopting. So during that period, 2010 to about 2015, is when really the number of payment methods and the digital adoption by customers started. And then the last 5 years, Ashish, is even children now talk about the last 5 years, and pandemic and demonetization were two major events that happened. So last 5 years have been characterized by adoption by enterprises, large and small, medium and big. And that has happened basically because of the government's push and the enabling regulation that has happened. And of course, UPI, right? It's one of its kind. And like Raghu mentioned, that has allowed for use cases to be built in any manner across every nook and corner of the country. You have a QR, you have a payment link, you have these combined together have led to significant growth. And of course, from here, it is even more likely to grow.
Correct. Very, very fair point, Karthik. And I distinctly remember my first experience of digital payment was on IRCT website, right? And this was way back in college in 2007-8 timeframe, when I used digital payment basically to book a ticket back home. And at that point in time, the only place where you would punch your card details or your net banking was on these government websites, because there you feel that this is secure and safe. Right? Everywhere else, there was still this missing trust layer basically at that point in time. We have come a long way from there to today, right? But you touched upon a very important point, which is that there are zillions of ways by which a customer can make payment to a merchant, right? And there are more than 200 ways by which a customer can make payment to a merchant, right? And from a merchant's perspective, 5 years back, the life was very simple. I know from a tax perspective, there were still leakages. There's still leakages today. But at that point in time, he used to only collect cash hard, right? Or the payment will hit in his bank account through an NEFT or RTGS, right? So he has to reconcile only 2 accounts to basically see how much they're earning towards the end of the day, right? Now, with advent of so many payment method and so much digital bank accounts, and this is, Raghu, to you also, given that your current organization is also focusing on SaaS products, right? Focusing on enterprise customers. From a merchant or a business perspective, how difficult or seamless that experience has been in transitioning from the old way of doing business to the new way of doing business, right? Because some of the softwares which are out there, they took some time to get aligned with how the market evolved, right? If you look at how Tally or enterprise softwares are there, the way they are structured versus the way people have been collecting money or dispersing money has been very, very different, right? So how has the experience for some of these merchants, be it large or smaller, evolved over the period of time?
So I can take a shot at that first. So Ashish, over the years, there is not a single merchant who hasn't changed their technology platforms at least 2 to 3 times. I'm talking about those who have not done, there have been people who have done changes over 5 to 10 times, but in the very minimum, it is about 3-4 times, right? And I think that is primarily because of the way technology itself has evolved. Technology, the support ecosystem, the partners who provide the technology to these merchants, the kind of tools that are available in Web 2.0 to 3.0, right? So that is one. The second is that in our experience, the more richer, India is the only country where you have this level of range of payment methods that is really there, right? And there's a reason for it. The primary reason for it is that there has been no controlled or let us say externally regulatory kind of controlled way in which these payment methods have evolved. Even incumbent players have always worked with the payment providers in a manner that the payment providers are able to create their own customer base, their own payment rails, and their participation with customers. And they can make it more relevant and work with merchants. So merchants today have a choice of payment methods, and it is just not about the 200 and therefore the complexity. It is also about the kind of costs that are associated with the payment instruments, right? The merchant has a choice for it. It is about the mode through which it can be made available. So I can do in-app payments, I can do SDK-based payments, I can do payment links, right? It's about the choice merchant has about the size of the payment. For quite a while in this country, the ability to do micro payments was very difficult, and the ability to do very large ticket payments was difficult, right? But now with more payment methods like a UPI or a RTGS or a IMPS kind of a mode, these options are now available, right? Similarly, the mode of making a payment, is it merchant initiated or is it recurring? So all in all, what has now happened is that the payment choices that a merchant can play around with is suited to the merchant's technology, the merchant's channel, the merchant's mode of collection, the ticket size, and so on. So these are extremely interesting and very rich portfolio for a merchant to play with. So it has really helped them quite a bit in the years, and they've been able to craft experiences also that work well for their customers.
Got it. And at the same time, I think there are specific companies also which are trying to plug that gap, right? By building layers basically for some of these enterprise customers or for merchants, be it in form of neo-banking, embedded finance, whatever we call it, so that they're able to provide a seamless customer experience.
Absolutely, absolutely. So,
yeah, Karthik.
Yeah, go Raghu, please.
No, very relevant point, Karthik, what you are telling. See, my point of view here is, agree there are 200 plus players. Let's also understand, you gave in your previous example, how the industry has been changing, right? A few data points, okay? In last 5 years, or if you see now, I think we have almost 2,100 fintechs that has come, right? While you can only qualify 200 people who are focusing only on the payment and payment-related solution, most of the fintechs, okay, out of the 2,100, I think more than 70% came in last 4 to 5 years, correct? Most of them directly or indirectly always have a payment solution, either white label or, for example, they'll use BillDesk. Somebody who might be putting a wrapper around BillDesk and might be calling it XYZ, correct? So one is from the customer perspective, two is from the merchant perspective. Customers are spoiled full of choices. Customer want to use as much as possible. There are multiple mechanisms by which the companies are wooing customer, right? Some of them giving ease of use, some of them, most of them use the concept of free stuff that they're giving or cashback that they're giving to the customers. That's a great stuff as far as completing a commerce or a transaction is concerned. Second data point is, let's understand the Indian demographics, right? Okay, if you look at India as a country, out of our population, 65% of the population is less than probably 35 years and younger. Okay, India has one of the largest amount of smartphone usage in the world. It's almost what? It's almost 500 million, and one of the second largest internet usage. Right? Almost 700 to 800 million internet users, second largest. And with the avalanche of 5G, it's only going to increase. Okay, that is from the customer side. So they're spoiled of choices. Any fintech that is coming focuses on them, they're going to do. But if you look from the merchant choice, from the merchant's point of view, it's like a classical South Indian thali, right? Okay, you put it in banana life, you have 100 items that comes in the marriage. So it's like for them, as long as the money comes to the account, they don't worry. They can keep changing anything. And why the change is happening? Because we are trying to only solve a bit size problem. Only particular problem in the entire life cycle of a retailer or a distributor is what we are solving. We are not actually going to the root and solving much more. The merchants want not just one solution, because all the 2100 fintechs I told about, directly or indirectly, would be selling to these merchants some product or other. So they are also spoiled for choices, but they have no loyalty or stickiness to be with them. So what is happening? One day they are with X, next day they are with Z, right? So how can you stop this change from happening? So what in our organization we're adopting is, be humble, listen to these people. A day in the life of retailer, the day in the life of distributor. What is that they exactly want? Payment is one of the problem. Accepted, agreed. What all are the other solutions that they want, through which you can also combine payment as a solution? That's exactly what we are trying to do. Otherwise, it's just 200 today. As the world opens up and more companies come to India, you will find also a lot of collaboration happening, technology exchanges happening, and more solution coming, and this 200 will become 2000. Correct? I don't foresee a world where after say 5 or 10 years we are the payment. No card, nothing. You just go automatically. Things will scan you, and the payment happens.
Correct. No, very fair point. And we recently looked at few companies basically which are trying to focus on voice or based payment interface mechanism, right? So you're absolutely right, Raghu, with respect to how technology will evolve over the period of time. I think time is only what is going to tell us about that, right? Before moving to business model, I have one more question, basically, and this is more Karthik for you, given that you've seen this very close corridors over the course of last 2 decades. And this is on how has been the experience of working with banks and regulators in this space, right? Especially over the course of last 2 decades, because Reserve Bank of India, though it is one of the most progressive regulator amongst all the regulator in India, but at the same time, the risk associated to digital payment or digital commerce is way too high, right, for anyone to fathom upon or to get comfortable around, right? And especially these large institutions, banks, they have a very particular way of working and the way they adopt things in a particular fashion. So how has been your experience over the course of last 2 decades, and how has that changed, if at all, over the course of several years?
All right, so I'll first cover the banks, okay? And to your last point, many a time I have wondered and put myself in the shoes of the regulator, and I immediately take off those shoes and said, just not possible to even fathom the things that must be going on in their mind for them to manage and sustainably evolve a large payment ecosystem like that of India. And truly hats off to them. We will talk a little bit more about that. But first, let me come to the experience with banks. The first investor in BillDesk was a bank. And I had read this somewhere else that, you know, when fintechs come into any environment, the banks are the ones that lose, because the fintechs take away customers from the banks because the banks are stodgy, they can't really execute the technology that well, and the fintechs are able to present smarter, nicer interfaces and so on. So what really should happen and what should be the kind of model, right? At a high level over the years, and I think as is evident in many other markets, these entities have to actually coexist. The banks have large customer bases. They have tremendous advantages in terms of existing traffic and journeys and use cases that need right solution. On the other hand, the fintechs are new, untested. They just have a lot of exuberance and energy, and obviously good tech and all the nice things that go with it. And therefore, that's the right partnership. And our experience with banks has been absolutely phenomenal. Right from day one, as I said, the origin of BuildDesk itself started with partnering with a bank and seeing how we could provide our services to the bank's customers. And therefore, that was the model that we as a fintech took in those days and continue to do, where we basically say that the bank becomes our customer and we service the bank's customers. We don't do a distribution kind of a model. Now there are fintechs that have primarily taken that as a space. But banks have, each bank has its own persona. And it's very interesting to see that each one of them has a very unique set of capabilities. There are banks who are regionally extremely powerful, and the kind of sway they have with their customers is so amazing that it just requires one word from the operational person there to the head of the other side organization to say that here is a fintech, please encourage them and do something with them. And that is how these journeys start. So building that trust and serviceability for the banks, understanding them very well, is, I think, a very positive journey that has been for us. And we've learned a lot from these banks. As I said, each one is different. So there is a bank who would be so highly customer focused that all your customer support processes go up 5 notches after you've got them as a client. And you can just replicate that across the board. There will be another bank who will say that, look, I can only work with you if you can geographically distribute yourself across the 25 states. And the moment you do that and you take up that challenge, you automatically have a serviceability across the region, across the country for all your partners. So I think for fintechs, and particularly the payment fintechs in general, the core, everybody thinks of bank as a payment, right? As your primary payment needs are met by the bank. So even now and going forward, they will play a very integral role.
And experience of working with the regulator over the period of time?
I think 2 points there. One is for quite a while, payment organizations like ourselves have been working with the banks and the networks, and they have been in turn regulated by the network, by the regulator. And therefore, ours has been a step up or a step down, if you, whatever that you may understand. It's only in the last few years that with the payments market evolving and the regulator clearly carving out areas and creating frameworks around it, like Bharat Bill payment and now the payment aggregation, right, is when players like us have directly started interacting with the regulator. And it has been an absolutely phenomenal experience because, here is a country where regulators keenly aware of what is happening. I think that is so thrilling to know, right? That they are aware of absolutely everything that is happening. The inputs are being sought in terms of how it is working. And look at all the, like the FM ma'am, Nirmala Sitaraman ma'am mentioned in her, speech earlier, all the kind of initiatives that the regulator is taking, these are all market building kind of initiatives. They identify a gap and they specifically bring in enabling legislation or regulation. Like, let's take, prepaid as a segment. It started way back in 2009, but over the years, if you just track it, every 2 years or 3 years, they understand what's going on, figure out what are the gaps, bring in the relevant things about enhancing it. When NCMC came in, they brought that. When wallets came in, they expanded the definition of wallets. They brought in guidelines, increased KYC, limited KYC. So same way for, let's say,
Yeah.
So this is the beauty about, and therefore the interaction has been very, very interesting and nice.
No, I completely agree with you. And I think this is our learning also amongst all the other sectors, right? Financial services is one sector where the regulator is always like at the forefront with respect to how the consumers are thinking what is happening across the globe. And they also work very closely with the ecosystem to make sure that things are implemented at the right time. I'll move to the next set of questions which I have for both of you. This is more to do with the business model, basically how the payment gateways has evolved over the period of time, right? Especially we talked about UPI, right? The QR code which has made the payment, digital payment available in nooks and corners of this country, right? At the same time, because of regulation and because of mandate, those are at zero cost, right? And players have figured out alternative ways by which they make money while enabling this payment infrastructure, right? But payment gateways, like you mentioned, Karthik, at the start of this conversation, that the business model was eventually a take rate model, basically on every payment which is being settled, right? Of that take rate, a line portion of the take rate is being maintained by the issuing bank, right? Given the way the unit economics works, right? And then a very small sliver is there for everyone else within the supply chain, correct? With UPI, which is already 40% of retail payment volume, right? And a very large growth rate at which it is growing. How do you see the business model of payment gateways will evolve over the period of time from where it is today?
Okay, so actually there are two questions in your one question, if I may. Right, one is about UPI, or one is about a payment method, which is a largish payment method that is regulatorily being mandated to be at a zero cost currently. That is one.
Yeah.
Right. And the other question is about the players like payment providers or payment service providers and their business models around, in light of, let's say, that event, how is it that this is going to work? So I think you have to look at both of them separately and then kind of put them together and see what it means. So regulatory intervention on interchange is not a new thing, as in it has been there in the past. In India itself, it has been there on debit card earlier, and then post that it came out on UPI, right? But if one were to look at, over the West or some of the other examples, right? In a country like, let's say, the US, interchange rates typically are between a 2.5 to a 3%.
Correct.
Which is one of the highest actually across the world, right? So while they may have a Wall Street and a Silicon Valley, but believe me, from a payment innovation perspective, they are way behind, right? In India, money moves faster, quicker, 24/7, and it is cheaper than, I think I can reasonably say, almost across the world, right? Even in a country like China, where fintech and the entire ecosystem evolved by about 2012, there was like a really large blast of work happening, 2013 to 16, so to speak, right? With the Alipays and the WeChats coming in place. Even there, the observed thing is regulator brought down the interchanges to like a 0.1%. So per se, when you just look at that in isolation, this is bound to happen. But what does it help? It helps in access. It helps in innovation. It helps in making sure that there is accessibility of a payment method for anybody to use. And that is the part which one needs to ask, that the biggest advantage out of something like this is that today any merchant, small, big, micro, small, individual, partnership, doesn't matter. The government has made UPI free as a payment method. Plus, it also makes it compulsory that you have to offer that, for your thing, which essentially means that everybody is asking for a digital payment mode. And that is a very, very big thing. There were months when one had to go and keep talking about the same thing to the merchant. Imagine spending hours to even convince somebody that digital is useful for you.
Correct.
We've been through that cycle. So now you don't even need to talk about it, right? Because there are a bunch of 100 other people doing it. And at the same time, the merchant understands that going digital helps them with not only collecting payments faster, but it also retains customers more. It gives them a great experience. It makes something live. It is just not a a page which has information. You also have transactions.
That too at zero cost.
That too at zero cost, right? So this is the one part. And I think the implication of that is that it has just helped widen the pie like nobody has ever imagined. So that is one part. The second part is in terms of the business model, or therefore, what is the implication of that on the payment provider, payment service provider? So yes, I think at a high level, it does mean that one of the payment methods is priced at zero. But you probably are aware that in any case, even in the past, not all the payment methods were priced at the same value, right? These were all, it's a mix of everything. And like you rightly said, the issuer has a certain reason why it is structured that way, that the issuer gets the bulk of it, because it's the issuer's customer. The issuer has put the effort to get the customer and make sure the customer is engaged and there is a repeat transaction happening and so on. So it is likely to be a mix of this kind of a portfolio, that payment service as a basic payment service will work. And then on top of that, what Raghu said is absolutely relevant. And I think you will have more questions on that also from Raghu and, around how more can be done with the same set of players so that this becomes an integral component of what you sell, but at the same time, there is money to be made on other parts.
Great. Raghu would love to.
See, this is, in all fairness, this is not my domain, but extraordinary insights by Karthik, because that's something that he has been living all these years. One or two additional data points as he was speaking, which I understood is, in last 2 years, a lot of magic has happened, right? We only see the negative impact of COVID, but for a country like India, there has been unprecedented amount of people, be it the merchants and consumer, moving to digital naturally. Okay, there has been almost more than 40% surge in number of digital transactions across India. And specifically when you talk about UPI, whatever was the pre-pandemic level, and I say pre-pandemic before March 2020, when you compare the transactions from March 2020 to Jan 2021 and Jan 2021 till Jan 2022, it's more than 3x to 5x than the pre-pandemic level. All the UPI-based transaction compared to all others. So these are unbelievable wonders, right? Naturally, it has happened, and it's like you can see significant amount of digital imprint and digital acceptance across the nook and corner of India, right? It has never happened, and that's the reason the scale increases, like what Karthik was talking about, the speed in which these transactions happens. I also never gave a thought about it. Probably it's one of the fastest in the world, and we try to undermine it.
Correct. And Raghu, to you, in your most recent organization, right, you guys are focusing on software as a service, basically for enterprises, right? And at the same time, you are enabling payments, you are enabling BNPL for some of these customers. How important is these alternative revenue streams, basically, to make the business model, from your point of view, more viable, right? Because again, like Karthik mentioned, that there are different layers within this ecosystem where different players are operating. Correct. Some people are operating more closer to the merchant, some are operating more closer to the issuer, right? You guys are sitting basically more closely with the merchant and with the businesses. Correct me if I'm wrong anywhere, right? How have you seen basically that journey from a small business perspective to the utilization of a BNPL product and to the utilization of other new banking SaaS tools when they subscribe to your services over the period of time?
Thanks, Ashish. Very close to me, right? That's exactly what we are doing in Actyv.ai. Not that we are promoting the brand or what we are doing. We call it Trinity, right? In classical enterprise SaaS companies, like the previous company I was working for, the only customer was enterprise, and we had started with one product and we started looking at variations of product to sell to them. In the current Trinity, when I say Trinity, I'm talking about enterprise, I'm talking about banks, and within the realm of distributor finance or the B2B BNPL, we are talking about distributors, dealers, and retailers. We don't go beyond retailers. We are not focusing on the B2C segment. So this Trinity is where we are exactly focusing. And there are three revenue streams for us. One is the enterprise, second is a bank, third is the distributor, dealer, retailer. So the most difficult part is how do you acquire distributors and dealers, right? So what we are doing is we are solving the real life supply chain problem for the enterprises. You take customer X, whom we are operating, they have say 8,000 distributors. You have system of records and you have system of engagement. The data of all this distributor lie in the system of records.
Correct.
Most often than not, this system of record is SAP.
Yeah.
They might be using some other ERP, but most of these giants use SAP. But the problem is SAP is mother of a single source of truth, right? Outside of SAP, there are multiple distributed system, disconnected system. So the organizations usually don't get a single point of view of what are their supply chain needs on every day. The communication from the head office to the field, salespeople to the distributors and dealers and retailer is broken, is disconnected, and is not real time. And for lack of words, it also moves in pen and paper. That is the level of non-digitization that you can see currently, even in advanced. We just spoke about the digital evolution 2 minutes back, but this is a reality. So what we are doing is we are working with this enterprise and digitally converting all the distributors. So first step we do before even somebody qualifies for a B2B BNPL, okay, we ensure that all of them get digitally onboarded. I will take an example and then go back to this. Assume there is a distributor who sells 20 lakh rupees worth of biscuits to a biscuit giant, okay, biscuit manufacturer. They have to pay the money to this biscuit giant in 3 days, okay. So after 3 days, when they have to pay the money, instead of this biscuit giant, I will just give an example, say it is Britannia, okay, they have to pay 20 lakh rupees to Britannia. The third day, this merchant will not pay the money to Britannia. It will be Kotak Mahindra Bank who will be paying to Britannia. Okay. Correct. So merchant then will pay the money back to Kotak in 7 days, 14 days, 21 days, 30 days, depending upon the days, 60 days. He can't convert this into term loan. Correct. So basically, what happens? The two questions is: what if this person does not pay back money to Kotak? Okay, there's a stop supply agreement that we have with this customer. So this particular person will get deboarded. How does the bank underwrite? Okay, for this particular product I'm talking about, there is no collateral. You don't need to open a bank account. So it's just a first of the kind in the industry. Yeah. So what is that in for the enterprise and for them? Even before this could happen, 2 prerequisites or 3 prerequisites that has to happen is all of these distributors need to have a digital avatar, and that's my favorite. Correct. So these people, the entire 360 degree of the digital footprints, be it their Aadhaar card, PAN number, GSTN number, last 2 years bank statement, ITR, everything from the enterprise comes to us. Okay, and we onboard them digitally. Okay, we onboard them digitally, and the enterprise get a single point of view of all the digital, all of the distributors, how are they placed. 2, once we onboard them digitally, the second step is we do a financial creditworthiness of all the distributors. Correct. Today, the reason somebody is at a particular credit is basically there might not be much science. Yeah. Okay. It might be due to the experience and the intellectual level of the company, right? Which is usually sometimes right, sometimes it might be wrong. There could be outliers, and all the enterprises are doing a fantastic job. Okay, so basically, we do the financial credit worthiness. The next step that we do is we arrive at something known as active score. Okay, we use when the financial credit worthiness is also based on a 200-point mechanism where we look at multiple data points and we use artificial intelligence and machine learning to arrive at the active score. It's a score based on 100 basis point. It's out of 100 basically, and whatever is the score, the credit happens. That's how the company allows this particular person the credit worthiness. Somebody could be at 20 lakhs, somebody could be 80 lakhs, somebody could be at 90 lakhs. The same credit mechanism or the credit score that has been finalized, the bank has accepted to use that as an underwriting mechanism because of the science behind it. So that is the model. And what now happens is this particular distributor who was never having a digital avatar now has a full digital avatar. All the transactions are rated. Okay, we currently have a score that is much better than the Beru score and DNB that is having. That's endorsement that we have got from these people. So what and I'm coming to the revenue model. Revenue model we can monetize from many angles.
Correct.
My favorite is all of them have a digital footprint and they have a digital track record. If you fast forward after 6 months, 12 months, they can actually deal with any enterprise in the world. Yeah. They have a clean sheet, which has never happened. So I call it as making them ready for Web 3.0 and Metaverse. Correct. Tomorrow, there is a company in Thailand who wants to work with these distributors. They can directly work because they have a full trail of the digital footprint and life cycle.
Correct. So I have one specific question on this, and this is, I think, both for you, Karthik, as well as Raghu, right? And we've seen over the course of last 2-3 years, and I don't know whether it is because of necessity or is it because of increasing the customer stickiness, engagement, all of that. We've seen companies who are operating on both the sides, right, trying to overlap and provide more services to the same business, right? By that I mean is that the payment gateway providers, that's a fairly complicated task, right? Building the pipes with the banks, integrating it with all the pipes and making sure that the payment success rates are very, very high. And on the other end, what Raghu explained, it's a complex underwriting architecture, basically, which supply chain financing company or a BNPL model is trying to build, right? We've seen that the companies over the course of last 2-3 years are basically getting into more integration around some of these things, right? And we wonder from outside whether this is out of necessity or is it basically to increase the customer stickiness and retention onto their platform. And how do you think basically about this when you embark upon from your side to this side of the table?
So basically, the answer is both. Now, what typically happens is that very often customers, depending on the kind of technology they use and the kind of workflows they have within their organizations, digital payments is one process within the finance organization. And most CFOs and finance professionals, big or small, clearly understand that digitizing or adopting digital is not just about digital payments, but also about digitizing a whole large workflow and a set of all finance processes. So, which is one of the reasons why the natural extensions of digital payment led workflow, if somebody has already done that, it automatically becomes the other streams or other processes, which includes accounts receivable, accounts payable, the taxation led journeys, GST filing, right? So, and then of course, lending or supply chain finance becomes another block, because you as an enterprise know that these are the problems you have solved. And now what you want to do is you want to provide a platform or an opportunity for your suppliers or your key stakeholders, for them to be able to avail these digital benefits, and it in turn also benefits you. So what one sees is a combination of 2-3 things. One is about digitizing in an overall sense. The second is about the ecosystem linkages and how players see the benefits coming back to them in all these modes, and that creates the demand. So this is on the demand side. On the supply side, you're right that players who have implemented one platform do feel that, extending it in some manner, and that's where, the expertise comes in. If you are really well aware of a certain kind of a segment or a certain type of ecosystem. For example, if you've done a lot of work with, say, agricultural companies, then you know that supply chain, you know the ecosystem, you know the linkages. So it is easier and smarter to be able to create additional hooks there or workflows there that can positively stroke the base work.
Does this require a very different DNA, right? Or you think that given the merchant segment or the customer segment is same eventually, and you understand the nuances associated to it, one can still develop the product basically for this market?
So I think finally, if you go and ask any fintech, you give them any challenge, they'll be more than happy to take it and say that they will deliver. That is the that is the starting point. The rest comes out of just the focus and the energy that you're able to bring on. So it requires, in fact, the same DNA that got them to do the first thing in the first place. Of course, capabilities that you need to do and what you need to build as skill sets, those are different, but nothing else otherwise.
So Ashish, one point which I want to touch upon here, what Karthik said is, see, when you look from the merchant side, okay, with a lot of innovation that is being brought, new changes are also coming, right? Even which is going to drive their behavioral changes, okay? When we speak about B2B BNPL, let's understand one thing. Currently, not that they are not availing of finance, right? Currently, people have overdraft and cash credit kind of facilities from the bank. So assume there is a distributor who has a 1 crore rupees overdraft cash credit which the bank gives. Fantastic. But does anybody, be the company, it could be Nestle, Britannia, or the bank, do they know where this money is being used? Nobody knows. It could be used for any purpose. And that's where what we are driving is, we call it as purpose, B2B BNPL is a purpose-based finance, or we call it as a bid-size credit. If today the necessity is to pay 10 lakhs to enterprise, exactly that 10 lakh is what is being extended. So the bid-size credit is a revolution that is being brought. Okay. And also what we are pioneering is, okay, usually in the Indian finance industry, you be an individual, you turn to a merchant. But what happens is you get finance for what you are and not what you do, correct? That's where the revolution we are bringing. You get the BNPL credit for what you do and not for what you are. So that's an important demarcation that we are driving today in the industry.
Correct. Makes sense. Given we are already at 5:50, my last set of questions are basically on how the industry will shape over the course of next few years, right? We've seen that the throughput which is happening digitally has increased multi-fold over the course of last several years. But where we are, this is still just scratching the surface, right? And over the course of next decade, over the course of next 5 years, the total throughput volume is going to become 5 times, 10 times. We are processing right now $300 billion. We'll be processing maybe $2 trillion worth of payment eventually, correct? So from that perspective, how well the current infrastructure which we have is built to manage scale? How important NEU, the new the payment infrastructure which NCPI is suggesting, becomes important in grand scheme of things in order to make their network decongested and help increase the sustainability of this digital payment infrastructure?
So at a high level, Ashish, innovation, one of the pillars, if I may, is about the rails that exist, right? And NUE basically promises to deliver, whoever are the entities who will take on that task, it promises to deliver new rails, and you can pretty much imagine that in the 1900s when the railroads were being built in the US, right? Somebody gave, I think, Uday I read some article on where Uday Kotak had basically spoke about how the horses were replaced by the railroads. But now we are at a point where the horses have to be straight away replaced by the jet cars. The railroads phase is gone. But what we are really talking about is the plumbing that we have, albeit slightly new. In the next 10 years, if you start putting thought today, that is when in the next 3 to 5 years, you will have a new plumbing altogether. That plumbing is very, very critical to growth, both in terms of throughput and the the way ecosystem can engage, the way players can leverage it, etc. And I think that is where the direction of NUE is very significant. The FM also spoke about the CBDC, right?
Yeah.
And that again promises to be a entirely wholly new rails, right? So what will have to happen is these will have to be thought through very well, implemented in a cohesive and a very strong manner with a good amount of participation from various players, so that it is successful and it is not creating silos or creating issues. And the advantage is India has a ready base to do things, and a lot of entrepreneurs and the right kind of capital that can go into building these out. So that's where it is.
Correct. No, you are absolutely right. You touched upon CBC, DC, and this was my next question, right? Because the incumbents will have to figure out how they transition. Correct. And it is not going to be easy, right?
Yeah, Ashish, the point is, that's one. I have very strong feeling on the contrary, right? Okay. We are looking at a systematic way of innovation. Whatever FM ma'am spoke, fantastic. That's from the policy level, and they are implementing. RBI now is evangelizing digital rupee to everything. A great change is happening. Let's understand the avalanche of technology. It's not about only India. We are going to be influenced by what is happening across the world, and the pace of innovation, pace of change that is happening specifically in the technology world is viral, right? You sleep today, you get up tomorrow, something new has come. And more often than not, we have to react to that, correct? Yeah. And that is what is going to be a prime. Today, we plan, we will do XYZ for next 5 years. But once these technological advancement comes, you have to react to it. One of my favorite character in Marvel Comics and DC is Iron Man, right? And what I always say is, why Iron Man is so powerful? He has the capability to process trillion of data points, not by himself. He has somebody known as Jarvis, correct? He says, hey, Jarvis, build me one of the best Iron Man suit. He's going to traverse the entire universe, right? And give something in no seconds. So every one of us would have to have a personal Jarvis someday or other, right? And we are talking about a stage where, we believe it or not, the future generation, say people who are 30 and less or even 20 or less, are focusing only on the metaverse. They already have started creating their avatar. They have started living in a virtual world. While we want to solve the problem and create newer solution for this world, okay, we might be wanting to create solutions for that world, because we will be left, that's a necessity. You can't live without it. So the pace of change on the pace of influence is like the confusion that we have, right? Should we regulate crypto or not? We might be thinking, but something larger comes up overnight. So that is going to influence the whole innovation.
Correct. No, I think Raghu touched upon very interesting things, and will not go into some of those because we are already near our budgeted time.
Sure.
But I think it can be a much longer debate, right? Is there any question from the audience? I can only see one question, which Karthik has already responded to.
So I think I can see these two questions. That so CBDC is a very interesting concept, and I'm pretty sure that the regulator will think in different ways, and the introduction of that will also come based on experience that others have had and so on. But I think the key is that the banks who are the incumbents and players, whoever are incumbents, and the new players. Somewhere there has to be a hand in hand that leads them, right? To start with, the newer players or the fintechs can be let to ride a bit loose, and they can get or create traction. But as soon as that happens, there is a rein around it to say that, is it happening in a way that you want it to happen? So that kind of a tug and pull will have to happen. At the same time, the traditional players with their strengths, their distribution networks, their capital bases, low access to capital, they need to be also partnering with these new age companies in a manner that they are able to leverage their strengths and at the same time also provide value to the other partners. So I think that's the kind of approach that might work. And what the incumbents can do is collaborate, and what the new guys can do is recognize that the old has its own wisdom and strength. Correct. And they put it together. So
correct. Thank you so much, Karthik. We are already near the budgeted time allotted to us.
Yep.
All right.
Thank you so much. Devendra, over to you.
Thanks, Karthik. Thanks, Raghu. Thanks, Raghu. Thanks, Ashish, for the insightful panel. Thanks a lot for your time.
Thanks, guys. Thanks, Devendra, Karthik, and Ashish. Thank you.
Thank you, Raghu. Thanks, Ashish.
Thank you. Bye.
Bye.
Thank you, everyone.
Hitesh and I were waiting in the room. So Hitesh last moment में गए होंगे.
No problem.
आप कहाँ हैं देवेंद्र अभी? बैंगलोर, जयपुर?
जयपुर.
घर बैंगलोर में है ना अभी आपका? Oops. You're live?
Yeah.
Oh, okay. Thank you.
Pratik, so we'll wait for our co-panelists to join for a couple of minutes.
Yes.
Then we'll start.
Yes.
Hi, Sweta. Hi, Hitesh.
Hi, Devendra.
Great. I think we're waiting for Sagar to join.
Yeah.
I think Sagar will join in a couple of minutes, so probably we can start. Hi, everyone. Welcome to the second panel for the FinTech Summit. We have very, very interesting panel, which is very close to my heart. Hi, Sagar is also here. Hi, Sagar.
Hi, Devendra. How are you?
Hey, I'm good. Sagar, if you can keep your video on. Yeah, great.
Yeah, sure.
Great. So as I was saying, the panel, which is very close to my heart, very, very interesting panel, and I have 4 esteemed panelists with me. It's a sector where we'll talk about where we have companies. There are companies which have produced a ton of profit without raising any capital, and we have companies which are turned unicorn without probably generating any meaningful revenue. At the same time, where we have companies which have started 10 or 15 years late and have leapfrogged to become largest company. So we'll gain the insight from all the panelists. But before I go there, I'll request quickly to introduce the panelists to quickly introduce themselves. Probably Pratik, you can start with a quick introduction about yourself.
Sure. Hey guys, I'm Pratik Poddar. I'm based out of Bangalore. I am an IIT Bombay alum, 2010 batch. I'm working at Nexus Venture Partners since last 7 years, and looking at fintech along with a lot of my colleagues. Nexus is a 17-year-old fund. We manage about $2 billion of assets. We invest very early in companies. We are early investors in Pubmatic, Kaltura, Postman, Dhruva, Delivery, Unacademy, Turtlemint, Rapido, Paysense, White Hat, and so on. So the quick background of the firm: we have 3 offices, one in Mumbai, one in Bangalore, and one in Menlo Park. Like I said, I'm based out of Bangalore. We have been investing in a lot of interesting fintech companies. Invested in Turtlemint, Paysense, India Shelter, OnSurety, and lots of them, and we'll talk about them as we go in the panel. And very excited to meet everyone here and learn from everyone.
Great. Sweta, you can quickly introduce yourself.
Yeah, hi all. Good evening to everyone. I'm Sweta Rao. My journey started with a tech person, joined fintech early in the days of 2000, and then joined technology companies. Tried my hands with startups and did angel investment for 5 years, mainly around fintech. A lot of fintechs, early investor into Bank Open, M2P, Cred, Bank Jupiter. So have an interesting journey from the early fintech stories. As we speak, I just launched this year, we launched our White Venture Fund, which is a 40 million fund, which will focus on early stage fintech. The approach we want to keep it is a very easy approach for the founders. It's going to be very angel-like VC, as we say it, and just institutionalize it and write a bigger check and be with founders' journey for much longer time. Have done few exciting investments already from the fund, and looking forward to a very exciting journey in this fund. Thanks, and glad to be here.
Great, Sweta. We have another person who has also started a fund, Sagar. So Sagar, I know you from quite some time, but it would be great that if you can quickly introduce yourself to the audience. Sagar, you're on.
Yeah, sure. Thank you so much, Devendra, for inviting me to this panel, and great to meet everybody over here. I think people have a lot of experience under this belt, investing in fintech at various stages. So glad to be part of this panel. As you know, what we've been doing, we've been trying to enter the growth stage space in India in the fintech space. Probably we can say we're trying to be the first growth stage focused fintech fund dedicated to doing Series B and Series C rounds in the fintech space in India. We're a $120 million fund. We have just announced the first investment that we've made, and we are continuing to build this platform, create an ecosystem around us that not only acts as a capital provider, but also acts as an ecosystem support to the portfolio companies that we are investing with. This is a fund which is in partnership with Venture Catalyst. So together we've come and created this platform. And this is India dedicated right now, and eventually the aim is to obviously become a global platform, starting with the Fund 2 and Fund 3. That's a quick summary on what we are doing. I'm obviously leading the fund as a managing partner and co-founder. And yeah, we've got a team of people on the ground and obviously a bunch of venture partners, advisors, and mentors all around the world to help us build this platform better and add value to our portfolio.
Great. Hitesh, I have known you for now 12, 13 years, and you have been in the industry probably like longest time, 20 years plus. So would love to know a quick background, if you can enlighten our audience about your background and what you have been doing in FinTech in ICICI Bank.
Thanks, Devendra. So I manage startup investments in ICICI Bank. We invest largely, around the Series A kind of stage. And in last 2.5 years, we have done around 17 plus investments. Our focus is largely around FinTech because that is our domain and that is what we understand much better. And apart from that, I also manage a startup engagement portfolio at the bank. Under startup engagement portfolio, we have created a platform to collaborate and partner with startups to create products which are in alignment with our digital roadmap. And there we run a lot of activities like accelerator program, incubator program. We conduct demo days, hackathons to engage with the startup community. The idea is to work with startups, co-create products and implement those products in the overall banking ecosystem. Third portfolio I manage is the blockchain related initiatives. We have created Indian Bank Blockchain Infra Company, and in that entity, 18 Indian banks have invested, and we are all working together to harness the potential of the DLT framework in trade finance domain. And the fourth portfolio is the digital loans, wherein we work with fintechs, NBFCs, and do co-origination and co-lending along with them. That's very brief about me. And happy to be, amongst all of you. Thank you.
Great, Hitesh. I'll start with shooting some question and would love to gauge insight from the panelists. So, as per my understanding, FinTech in India is as old as the ecosystem itself. In 2000, we had one of the fewer VC funds came, like ICICI when Irrespec Ventures, they could know Subramanian was part of that. And in 2000, we had FinTech payment startups coming up. But if we take the journey, FinTech in earlier decade, or probably more than the decade, was limited to only payment startups. So would love to understand what are the constraints which limited only to payment and not other areas of FinTech, and what changed over last 8 to 9 years when suddenly we saw boom in FinTech that today we have 20% of unicorn in FinTech. So would love to know that. And Hitesh, given you have seen the industry longest, since 20 years, you have been part of bank since then. So would love to know what are the challenges that you think that led to so delayed sort of emergence of FinTech across sectors, and what were the driving factors which led to sort of the FinTech going to the sectors?
Yeah, so I think you're right, Devendra. Initially, it started with the payment ecosystem, and we have seen a lot of early adopters in the payment ecosystem for which were pro kind of technology. However, few factors which kind of emerged. One, I would say, is the availability of the data. If you see the internet penetration, the the availability of the mobile phones, kind of it jumped at a very higher speed in terms of penetration, which helped to, and which actually helped in creation of a lot of data which was erstwhile not available. And as we moved towards more and more digitization, land records got digitized, a lot of government records got digitized. Now all this data, GSTN, right, which earlier was not there, Now, all this put together created humongous amount of data. So when you want to do lending, let's say, for example, you need a lot of the data to do the assessment of an individual's profile or the profile of the business when you are doing the credit underwriting. When this data became available, a lot of models emerged around alternate data lending. And then that was the second wave which started, after the payment about alternate data lending. The third, kind of evolution which happened in the, the overall scheme of things was, advent of, neobanks, which also came with a value prop that how do we provide a much better UI UX or a much better experience, to the customers, though customers are, doing their banking with their respective banks, but is there a scope to improve the overall user experience, offer more contextualized products, offer more hyper personalized, kind of product offerings? So that again, was led by a lot of data availability, and payment in a way also became one of the data source. So most of the payment companies, started also monetizing the payment data. So I think the basic pillar, for the fintech, to get spread to the other areas, when it started with payments, I think was one pillar was data. Second pillar was the government's initiatives in terms of creating a lot of infrastructure on which, one can ride. Like, for example, today we are talking of Open Network, right? Which again will facilitate a lot of credit to the segments which hitherto it was not possible. So I think these are some of the factors which led, to the spread of the, which kind of touched upon the other areas of the, the banking domain as well.
Thanks, Hitesh bhai, for your insight. Sagar, you invested in traditional businesses in your earlier avatar. So what's your thought? Earlier it was constrained only to payment. Now we see it's going to everything, and now you have launched a fund. So obviously you see a huge potential in this segment, right? So what would your thought, and what Hitesh bhai covered data, some government initiative, anything else apart from that really changed that?
I think it was when I looked at transitioning from private equity to more like a VC hat, right? And that journey from doing traditional NBFC and bank investments to more today's new age tech investments. Fundamentally, as I think Hitesh rightly pointed out, right? Data has changed the game significantly, but a lot of public infrastructure which is made available by the by NPCI, especially on the UPI side, especially on the Open side, account aggregator, digital locker, eKYC, eNACH, right? A lot of these things which are now made available has made doing businesses in the other sectors much more possible, much more easier, much more faster, right? Also, I think what has happened in the last 5 years, VC capital, which was earlier not available, right, for traditional businesses, has started to become, for the new age tech businesses, have started becoming a little bit more accessible and available. Initially, the most easiest business model for tech VCs was that payment becomes much more easy because there is fundamental simple business model that you charge money for every transaction that happens. That gradually evolved. VCs started experiencing how lending businesses could take off, how insurance businesses could take off, and for that matter, how customer acquisition could become much more easier with these new infrastructure available. So I think availability of VC capital also for new age businesses was a lot more prevalent out there, and that's why I think the takeoff of these businesses was slightly a little bit more later compared to what we were seeing traditionally in the market. NBFCs continue to receive a lot of love. If you look at the 2016-17 cycle, small finance bank got a lot of money, payment banks got a lot of money, but the tech businesses were still not getting a lot of capital at that point of time. So I think somewhere capital availability, maturity in the market also took some time, and that's why last 3 years have been that cycle where a lot of factors along with the capital and the infrastructure push led to creation of newer businesses, more capital flow in that direction. And not to mention, even we took that same call, right? We gradually transitioned from traditional businesses to new age tech businesses because we realized the market is maturing, the depth of quality of the founders was improving, there's more seasonality, second time founders are coming out. So all of that factors led for us to create this fund. And at the same time, I think everybody in the market is seeing a lot more opportunity. And I'm sure, I think Hitesh, Pratik and Sweta, all three of them are seeing similar depth of high quality founders in the market, right? And that's where the money is flowing in different directions compared to just payments.
Great. Saga, that's pretty interesting thought. And you absolutely spot on that. Payment was a very simple business model. In fact, entire banking sector, NBFC has been pretty simple because they like to make money on everything. If we give them money, banks want to make money. If we take money from them, if we borrow them, they want to make money. So Sweta, coming to that, in recent time, we have seen businesses, and I've seen very interesting Twitter threads, articles, where businesses built out, raised a lot of money without any business model. Especially talking, let's say, trade, people kept debating what the business model likely to be. Grow became a unicorn without on a direct mutual fund, which doesn't make any money for the distributor, right? So now you see a lot of these new, in fact, neobank probably would also fall in similar category, where ultimately it will take some time for them to figure out business model, right? So traditionally, banks have a very clear business model, payment had a very clear business model, and now suddenly we see a lot of ventures coming out who feel that let me build a pipe, let me build a distribution, and let me figure out how I'll make money later. So what's your thought on that? And how, as an investor, you look at these businesses? What are the key thoughts that come to you to either invest or not invest in such businesses?
So yeah, I want to start with the earlier question of yours where you said that payment, why payment came first and then those other fintechs, right? Because unless you solve that payment, a lot of these businesses didn't make sense. Today you have a card for the students, didn't make sense if payment is not sorted. Insurance doesn't make sense if payment is not sorted, right? And so when these businesses came in, we didn't understand that how powerful it can be from the distribution point of view. So it looked that they're burning a lot of money and just capturing the consumers. But if you look at the new age consumer, to engage with them, you have to be there where they are, right? So typically, like if I am on a Snapchat and I get a product, say that I can, and I'm a student and I can actually take a service of a Q math, and then I have a facility to make a payment also there, I'm going to actually make that transaction happen, right? Now, earlier when any of these social media, you be it on a social media, these new age fintechs, the way they started off is, I want to be where my consumer is and be there and then offer them financial products, right? So when you look at it, it just looked as if, they are just burning money, acquiring consumer, they can't figure out, but that was a very, very long plan to it. It also helped because there are a lot of these infrastructure companies came into play, right? If you see that M2P or, internationally, there's a Marketa and those companies, which also help embed those products into them. So if you can engage with your consumer in a right way, these companies really worked well. And you mentioned about Cred. So if you look at Cred, now Cred is one of the top, doing top UPI transaction in the lending, they are doing so well. So there are a lot of businesses or a lot of use cases which we didn't think of earlier could also play out in that sense. But I think the crux of it is how do you engage with the consumer in a very interesting way? What kind of user experience you can provide? And that's what drives the generation of consumer. I think that's what played out, and that's what has worked in our investments as well. So yeah, that's what is my thoughts, that it may look like that, but it is really, it's a very powerful game that you can play once you understand your consumer and the distribution well.
Great, Sweta, that's actually great thought. And you rightly hit that payment is first needs to be solved, then everything else come later. Pratik, you have studied Chinese market a lot. You are almost an authority when it comes to a lot of Chinese companies. And in China, based on my couple of visits and whatever I know about China, I saw payment actually became a way to super app, which became extremely sticky, and like huge, very large companies got built out on those model, right? But at least I've not seen that being, let's say, built out yet in India. So what do you think? And we are probably not that behind. We are still sort of getting towards maturity, not as mature as China. So what do you think has not sort of happened in India, that we don't have super app like WeChat or Alipay, which is driving everything, and then entire newer categories being built around that? Or you think probably early and that would happen maybe like 5 to 10 years? What's your thought on that?
This is a very interesting question. First of all, I don't think payment was a central use case because of which super apps got created in China.
Okay.
For a super app to get created, it is important to have a very high frequency, very contextual use case, which people cannot leave, and people associate that, and that use case expands into other things. So maps could have been a super app use case, and that's what Baidu was trying. It failed. Chat could be a super app use case, and that's why WeChat succeeded. Payment was a layer on top of it, and like Sweta alluded to, payment is really a layer, really rails. It has to be there. Actually, payments come first, then education and commerce and other startups come, and then maybe all the other, once data is being collected, then all the other lending and insurance startups come. But so in India, payment becoming a high frequency use case as a central point has not happened yet. Is it high frequency for people on the call here? Yes. But even for us, do we really think of one payment app as the only payment app for all of us? Perhaps no. All of us use Google Pay, Phone Pay, WhatsApp, Paytm, and bank apps. Like, we all use everything, right? So till the time that is happening, that one product becomes a high frequency central use case product, it's difficult to be a super app. I would, on the point that everyone else was discussing earlier, I actually give a counter example to the fact that payment was the only thing that was working in India earlier. The largest, amongst the largest and well-built companies was Policybazaar, which was started in that era itself. So I actually think that I don't think anyone, neither the consumers nor the investors nor the entrepreneurs, differentiated and said payments is the only use case. But what are the four businesses that are built on financial services? One is payment, one is lending, one is insurance, and one is wealth. Lending, like Hitesh alluded to, required data, required collection capabilities. It was not easy to build tech-driven lending companies in those days. And that's why a lot of VCs like us invested in real lending companies, and it did well for all of us. But tech-driven lending companies did not exist then. Wealth, candidly, the market in India then was small. The market has been expanding because of the growth in stock market, and people are becoming richer. People are becoming richer, and India is becoming richer. But wealth market 10 years back was really very small, and I don't think most people anticipated as easily that the market will expand so fast. And the other two use cases, payments and insurance, people experimented and people tried a lot of things, and we see a lot of outcomes. Like Sweta alluded to, I think over time, people have experimented on all the four paths. And what people have realized, that distribution and trust is really the moat for most things in life. So you and I are talking about whether models exist or not. Founders perhaps know the model. It's armchair discussions can happen that models don't exist, etc. But founders perhaps know the model. And at the back end, what they are really optimizing for right now is creating distribution and creating a layer of trust that people will go to that brand whenever they need something in that domain. And that is, all these companies are supremely valuable. Earlier, I used to say that India has two types of startups. One is consumer and one is SaaS. Now we talk about consumer, SaaS, and financial services, because truly it has taken a whole new, it has created a whole new world of its own. So yeah, quick answers to all 3 points.
Pratik, you talked about distribution being built, and typically in venture capital funded businesses, what we are seeing, typically once a couple of players get built out, it becomes like those players become the last player. It's not that any other player doesn't come, but for a third player to come and become large, become difficult. In financial services or fintech, or if I talk about payments specifically, we are seeing that happening. We are seeing a company, Razorpay, which got started in 2014 in Jaipur, now is the largest payment company. If I leave aside, let's say Paytm's recent fall, probably second largest. So, and Paytm itself was started in 2010-11. So, what's your thought? Ola, Uber in taxi, Flipkart, Amazon in e-commerce, but in fintech financial services, opportunity exists for even a latecomer to come and challenge improvements? Good to get your thought, Pratik, and then probably we can go rest to the panelists. Given because that question would really answer for a lot of new age entrepreneurs. Hey, we can go and challenge somebody who's probably a $5 billion company today.
Yeah, you're right. And fintech, this is happening much more, I think, because of two reasons. One, the underlying ecosystem is continuously changing. 6-7 years back, we could not have imagined that the way government has innovated and created new products and created new rails on top of which new entrepreneurs are creating products. Because of that, new companies are being created because earlier those companies could not have been created. So as the ecosystem is evolving, as the infrastructure is improving, new companies are being created, and that is a good news for all entrepreneurs here, because that means new opportunities get created every time a new platform is being launched. For example, when UPI got launched, lots of new companies got created. Account aggregator framework will lead to new companies being created. The improvements in UPI will lead to new companies being created, and we all need to be aware and know about it on what is happening. By the way, one company that I'm working closely with, Turtlemint, they got created because in that year, government changed the regulation. It was just one small line in a large set of regulations that were presented. But that year, government said, well, POSP is allowed, and that's how Turtlemint got created. So because the underlying infrastructure changes, new companies are getting created, and that is good news for entrepreneurs. That's first. Second, this is not true for fintech, but I think across all the verticals, the best way to enter a market where large companies exist is to start with a small niche overlooked area. There was a fantastic book that I read, Laws of Branding, I think 23 laws of branding, 40 laws of branding, something like that. It talked about you just have to, every time you just have to know that you are the best at something. I'm the best car company in the world. I'm the best car company in India. I'm the best fast car company in India. I'm the best cheap car company in India. You just have to be the best whenever you define yourself. And once you are best at that, once you win that market, then you can expand into other categories and even dislodge the largest player. So across, like, interestingly, all these companies you talked about, which started when incumbents already existed, they came in a very unique entry point, and because of the unique entry point, they could compete with the existing player and push them out, or take market share for them. So across the board it holds, and fintech it holds even more because the markets are expanding fast, and you need to just go after a fast expanding, overlooked market which no one else is looking at, and create a large company there.
Sweta, Sagar, you guys have launched recent funds, and this is great news, right? You can go and disrupt existing player, which is probably $1 billion, right? So what's your thoughts? Pratik already talked about, you have already some niche where you are going and compete after them. Any additional thoughts you have, which could provide some insight to entrepreneurs starting something in areas which are already being captured by existing players?
I have, okay, you want to go?
Go ahead, Shweta. I'll add to that later on.
No, so I believe the first wave of fintech, which basically did a lot to do with digitizing the offline processes and bringing it online. So if you look at everything, right, we were making payments through bank networks. Now we could do it much sophisticatedly. We could do a lot of things. We used to write forms and do certain kind of processes which became online. So first wave of fintech, if you look at it, all of them basically try to digitize the existing processes and infrastructure. And now that we have a lot of these new age middleware kind of companies also available, and the infrastructure available to it, like we have a UPI rails, we have the whole India stack available. I think now there will be a lot more innovation based on new age consumer rights. And so even for the payments, I have so many payment methods, right? I pay my credit card, I pay by debit card, I pay by UPI, I pay by so many wallets, so many other ways. But now actually what I would want is, I want data to be used based on my pattern and based on understanding that what kind of rewards I get from each card. Somebody should be able to say that, for this transaction, without complete seamlessly, make this credit card as your payment option. So those kind of things would come up even more now. So I just feel that second wave of fintech will use all this infrastructure and come up with very innovative ideas in the products. So there's huge scope in there, right? Because now we have used to digitized products. We need now more innovation into that. So I feel that every area of fintech where every unicorn exists, there would be new innovation using the new technology. It could be tech technology, it could be blockchain technology, it could be so many more technology from general infra piece. I think that's where a lot of innovation will come. So I totally feel that there are a lot more innovation to come into fintech.
Sagar, your thoughts on this?
No, I think interestingly, one of the things that I clearly watch more closely is that financial services globally, right, continue to acquire 1/3 of the economy, right, or at least contribute 1/3 of the economy. And financial services beautifully cuts across all the sectors, right? Whether it's agriculture, whether it's healthcare, whether it's B2B commerce, whether it's education for that matter, right? Take any industry in India, right? From real estate to anything, right? Financial services becomes an extremely important part, whether you're talking about payment, lending, insurance, and wealth, all four of them, right? And that's why financial services will never be, and fintech is a derivative of that. And that's why I add financial services more than fintech over here, that it will never be a winner-take-all market, right? There will be across the sectors, you will need to create products and services where you need to go deeper and deeper, peel the layers of it, right? Innovation, as Sweta rightly mentioned, is a lot more possible in financial services and fintech than in any other sector. And that's why there's more duopoly in other sectors and never a monopoly or a duopoly in financial services, right? And it will continue to be the case. We will keep acquiring larger shares from other sectors, and we keep acquiring more and more piece of the pie from other software sectors. And that's exactly where the innovation is happening, and that's exactly where the financial services sector is going. It's the largest sector. It continues to attract the largest amount of capital globally, both on the traditional side as well as the new age tech side as well.
Great. Hitesh, coming to you, Pratik talked about government also innovating. So what we've seen traditionally in any sector, people hesitate. If government is doing something, government is more, people typically hesitate. What's your view, given government had taken a bunch of initiatives? So what's your view, how government initiative or intervention have sort of constrained or helped the fintech sector? Hitesh, if you could, given you also have the view from bank side, you could quickly provide your views, Hitesh. Hitesh, you are on mute.
Yeah. So the bunch of initiatives, I think, UPI payment ecosystem, I think it's one of the best, payment ecosystem in the entire world, and some of the countries across the globe, have evinced interest to adopt this, in the respective country. The initiatives like, account aggregation, where the sharing of data, becomes much more easier, through the consent by managing the, consent of the customer. The GSTN network, creating a lot of ease, in the filing of the tax returns, and that again creating that, data layer, which can again be used in lending. So I think a lot of these initiatives, even like, regulator, if you see, they have created the innovation sandbox, wherein if you have an idea, you can actually apply for that sandbox and they will support you in terms of commercializing that idea. So I think all these initiatives have gone, it has gone far beyond in terms of helping the growth of the entire startup and fintech ecosystem in India. And, apart from that, we have the a lot of incentives, which are, tax incentives, relaxation in terms of, the patent fees, the trademark fees. All these have definitely helped, in the development of the startup ecosystem in India. So I think what we have seen is that very positive and proactive role being played by the regulator and the government in promoting the, digital, in promoting the digital framework and in promoting the overall startup ecosystem in the country.
That's pretty interesting thought, Hitesh. So, Sagar, would it be right to call that government itself is a catalyst or innovator in this segment, and they have actually taken the lead in innovating along with the entrepreneur of the country, and they have facilitated actually the whole sort of platform approach to innovation by the entrepreneurs.
Yeah, no, Devendra, I agree with Hitesh. I think India is one of the most progressive countries in the both central bank as well as the non-profit organizations that we have, such as NPCI, right? One of the most progressive, I would say, development bodies in India. They have constantly created the infrastructure, right? Whether with launch of Aadhaar, whether with launch of UPI, whether with launch of all of the models around OKIN, eKYC, right? Onboarding journeys for that matter. A lot of this infrastructure has enabled the acceleration in the fintech space. If none of this would have happened, right, and if none of this was pushed by the government and pushed by the central bank and pushed by the likes of the NPCI, we would have never been in a situation where we could call ourselves as one of the most progressive fintech economies in the world. Right? I think the UPI itself is a proof that we have created one of the best payment infrastructure, which everybody in the world probably wants to replicate today or try and see how we can export this to other developed markets. Right? If you look at the way even today, the innovation is happening at the government level, right? The whole fact that government thought about creating a new, or central bank thought about creating a new umbrella entity now for payments and licenses, right? That's again just a thought process behind how we can do this. Going payments to feature phones, right? Pushing that thought process. A lot of the population is still under that category where they're not using smartphones in India, right? So bringing all of those guys into ecosystem is a lot more proactively done both by the central government as well as the central bank, and that's exactly why people are such as VC such as ourselves are even more excited that it's a very progressive economy. The policies that government is thinking about, we have a digital bank, at least a framework or a conversation going on, right? In a market like India, which would probably never be possible if we had other developed markets or other developing markets, if you look at it, right? We're at least talking about it. Same thing on the digital lending side. Government saw that the pace of lending was increasing and the growth was substantially high, exponential growth. We need to come up with a framework around it, right? So that just shows that we are more progressive than regressive, and the infrastructure that is being offered by the government and the NPCI and the RBI is towards acceleration of adoption of fintech across businesses, consumers, as well as the financial inclusion space. Hello?
I think we lost Devendra.
I think we lost Devendra, yeah. Interesting times to be in the fintech space for all of us, right? I think everybody's trying to do their bit and add value to the ecosystem. Definitely you guys at White Ventures, Hitesh, good to connect again. You know, we've been connected on emails and not interacted, but definitely good to hear from you as well. And pleasure to meet you, Pratik, as well.
A pleasure connecting with all of you. Maybe we can also take some questions from audience if there are available on the chat. Still that I'm would... back. Yeah, are there any questions on the chat bot, chat room, or let me try and access it?
I think it'll be on a YouTube, right? So,
yeah, and we will not have access to the chat.
We don't have access to the chat, but it'll be on a YouTube.
Yeah, sure.
Got it.
Yeah. Okay, we're waiting
for the question.
Okay, great.
Yeah.
Yeah, she joined in 30 seconds or so. It's out now.
Yeah.
I actually have a question that we can probably brainstorm a little bit more about, right? I think how are we thinking about this new platforms that are especially coming up on the blockchain side, right? People are talking about Web3 more. People are talking about more transactions happening in that new age meta world or metaverse, you can call it, right? Whatever you define it as. And increasingly founders are trying to build platforms on around cryptocurrencies and the platforms around that. And that's going to kind of add more value or probably disrupt a little bit more the traditional financial services space or traditional fintech space, right? How are you guys seeing it? We are meeting with some interesting founders at those stages where they're building really fast the whole decentralized finance at the same time, right? What are you guys seeing on the ground? Are you meeting interesting founders? Are you seeing some sea change happening, or this is just more incremental value add that's being done across the space? So starting with Pratik, over to you. What are you guys seeing at Nexus as well?
Yeah, I'm actually spending about 50% of my time right now in Web3 and very, very excited about the potential. But I actually simplify my life by thinking about companies in different stages, in different layers of operations. So a lot of DeFi companies I meet are actually operating at the crypto layer only, where people are helping you make more money of your cryptocurrencies, helping you manage your assets and so on. So they are operating only in the crypto layer, a lot of them, and that makes my life easy, because then it's just simple thinking about crypto as a currency, crypto as a different asset class, and someone is helping you create better yield, someone is helping you manage it better, etc. That is easy part. Someone is helping you think of it as payment, think of it as for trading, etc. It all makes sense. The place where it connects to the real world is at on-ramp and off-ramp. The on-ramp and off-ramp is something where we have to think about it more deeply. And that's where all those regulatory concerns and all those compliance issues also come in, which we think about more deeply. So most of the investments that I have done till now have been only operating at the crypto layer, connected with the real world only at one point, where you could control the experience and control the compliance and make sure that you are doing things right by the government and right by the customer, but operate only at one layer and not be connected to the two layers at all points and create inefficiency. But that's the call I have taken when I'm investing in companies. So like I'm invested in Mudrex, which is a crypto asset management platform. So on-ramp, of course, is interesting, but after that, it all is in the crypto world itself. I'm investing in an identity protocol, which helps lenders identify the customer better by creating a unique identity for the customer across all his transaction, across all the addresses. It's a very exciting product, but again, operating at the blockchain layer only, and that's why I disconnected with the real world. I'm investing in a lot of infra companies, which is helping other companies on the crypto side manage things better, or other companies on the real world side manage things better. And I'm investing in the picks and shovels businesses, which again makes it kosher at the regulatory level. But if you're connected at both the ends, then it becomes challenging, in my opinion.
No, I think that's interesting perspective. Devendra, sorry, I've taken the role of a moderator for the time being, since you are not there. I've just asked the panel a question about how are we seeing the whole tokenization, Web3, DeFi, decentralized finance, right? How the whole ecosystem that's coming up really fast, right? And there's new developments happening, infrastructure happening. So wanted to hear obviously everybody's perspective. Hitesh, I think you are looking at blockchain very, very closely, as well as what you mentioned at the start, right? So it would be great to just hear your perspective, and then I'll give it back to Devendra and Sweta, right? However, whatever next you want to discuss, for sure.
I think I missed your last line, Sagar.
No, I thought you're spending a lot of time in that space, blockchain, and as well, right? So it would be great to hear what you are seeing at that Series A and the early stages, because a lot of early stage companies are there. I'm still finding it short at the growth stages to find good companies, but I'm sure you are seeing a lot more at the early stages.
So I think we are more keen to see the use cases and applications which are on enterprise side, right? I mean, so when we created IBBIC, we kind of took an approach of building the entire platform right grounds up, right? I mean, because it was not available in the market, right? Nobody thought of building a platform like this, and we thought, let's use our knowledge from all the stakeholders, bring them together and create the platform from the grounds up, right? So and we also thought that DLT, if you want to use it in the financial financial services segment, I think there are certain use cases which it will give you superior results, right? And that's where we debated a lot on which could be the use cases, whether treasury operations can be the use case, it can be KYC, or trade finance, loan syndication. I think we zeroed in on trade finance, considering that it's very cumbersome, paper intensive, it is prone to frauds, and there are multiple stakeholders involved, right? So that's where we thought of using DLT framework and creating a platform where we bring all the stakeholders together, like whether it is importers, exporters, whether it is importers bank, exporters bank, insurance companies, shipping agencies, freight forwarders, right? And many other stakeholders brought together on a single platform, and the base is, entirely on DLT framework. So the kind of use cases we are more keen is to kind of, get enterprise grade solutions, solve larger problems, with this platform. To give an example, like, LC discounting, which end to end takes today anywhere between, 7 to 9 days. On this platform, it can happen within, 24 hours, right? I mean, so that's the kind of efficiency one can, leapfrog to. On the, other applications, probably I can foresee that today when customers are engaging with the bank, or any financial services entity, largely they engage either through mobile app or through the internet banking portal, right, which respective entities would have created. So that experience is, not very immersive experience for consumers to engage and, get that feel. So I think what we foresee is that later on, there would be a lot of innovations in terms of how do we make the customer experience more immersive. If you're approaching a bank, for an home loan, kind of sitting in a bank branch, can you get to see all the properties of the developers in a manner that you are actually walking through all those properties, your avatar is walking through all those properties, right? And getting a feel of this actual visit so that you can shortlist, and then it curtails your time of buying a property. And whereas, bank is providing you a complete solution, whether it is financing or property search, but this would be more, kind of be plausible with, more and more, metaverses coming into play, and a lot of NFTs also getting created, which will be serving the real life purposes, right? And probably, the interoperability of those NFTs as well across the platforms. So a lot more those things, I think, which we will foresee, as we kind of move forward on this, path. But largely, I think we are more keen to see a lot of enterprise grade solutions getting created, which can solve large problems.
Interesting.
Very interesting.
I'll just Sweta for your final views on the space, and then we'll hand it over to Devendra as well.
Devendra, we have time, but quickly, yeah. So very bullish from the blockchain. I come from tech background, so always like, and I think the blockchain technology is something which I really like. I'm seeing very interesting companies. Of course, the yield and the spread kind of one, which is very common right now, but very interesting into NFT, where, NFT projects are getting on Discords, right? They do the funding on the Discords, but if you want to really actually be part of those NFT projects, you have to be part of those 200 groups of NFT on a Discord, right? So this startup is basically first consolidating all that for you, like an angel list where it shows the projects which are available, where you can go in, and in top of that, trying to do insurance to that, and the staking and the insurance on top of that. It's a very, very innovative way of thinking. In US, there are companies which are doing insurance on NFTs, but very traditional approach, because those are traditional insurers which are actually building the tradition. So very interesting innovative ideas I'm seeing. I have taken a small bet into that, but nothing major. Still have invested, still watching, because we just launched, and I think initial infra part we missed into Web3 world. So, but seeing a lot of interesting things happening there. I think, Devendra, over to you. I think we might want to go in Q&A.
Sure. Absolutely.
Yeah, exactly, Devendra.
Yeah. Sorry, there was some technical glitch at my side. One very interesting thought, Hitesh, from you. We've traditionally seen venture capital, and Pratik probably would say he will come from that thought process. Venture capital typically come with the whole thought of disruption. The new guy will come, disrupt the existing guy. But what we've seen very beautifully so far, coexistence of new age fintech ventures plus banks, and banks are working collaboratively. In fact, you are heading a unit which actually facilitates that inside bank, and you are actually in a lot of ventures. So Hitesh, if you can comment on that side, and do you think at some point that could be a potential risk, actually a bank where right now it's collaboration we are doing with a lot of players that could lead to disruption, and that can lead to disruption of bank itself?
I think disruption is a continuous process, right? I mean, there would be challengers, right? I mean, Swiggy, Zomato came in and people felt that it's a duopoly, and merchants felt that they are kind of, why we need to pay them, Then DotPay came in as a challenger, right? I mean, so it's a continuous process, every time even for new age companies also, there will be challengers, right? I mean, so they will also get into a kind of position where there will be challengers. So I think it's a continuous process. What we believe is that there are strengths which bank can bring on table, and there are strengths which fintechs and startups can bring on table. Jointly uniting those strengths can help reduce the cost, provide better experience to the end customer, right? That's the overall goal in terms of how do you make the financial services more and more affordable, more and more accessible, and enhance the user experience so that adoption goes up, right? So these are all interwoven and interlinked phenomena. Per se, what we have seen is the overall financial services market is huge, and within the financial services market, there are verticals which are payments, lending, wealth management advisory services, and so on and so forth. You have trade finance, you have corporate banking. There are multiple verticals which are there within the financial services. So, and each of the categories, there is a lot of innovation which can be done. So my sense is that there would be a lot of disruptions and innovations which will keep happening, and banks and fintechs together can actually leverage their own strengths and work towards providing the superlative experience to the consumer. And that is what we have seen, which is happening in the market, and it is working win-win for both the parties.
One last question, and this question is for all the panelists. My belief, Hitesh, is that banks or financial institutions are systematically important for economy. That's the reason we have central bank who tries to protect the bank by ensuring initial capital, then ensuring capital requirement, and having keeping a close eye. So given banks are so important for economy, obviously it's not easy that a bank could be easily disrupted. At the same time, we are seeing, let's say somebody like Elon Musk getting into zone of sovereign countries, right? Building an entire facility of launching satellites. So short term may not happen, but assuming that economies become so resilient, new technology becomes so resilient, that governments get the confidence that a new technology without having the traditional standard requirement which central bank used to have and can happen. So do we think in next 10 year or maybe 15 year, do we have a complete digital bank? Do we have a digital home loan provider or digital asset manager or digital insurer, etc.? And which of these areas we could think any of that sort of happening? I'm not talking about an intermediary who is supplying leads or intermediary who is trying to solve a particular problem. I'm talking about somebody who is doing end-to-end and probably known only on digital strength of that. So Pratik, we can start with you. Any of the areas where we have traditional players, but do you think a new age completely digital player can come and can build that?
100% it will happen. It is probably happening right now. You probably don't understand it because the entry point is different. See, whoever needs to say that they are building a digital bank are perhaps not building a digital bank. It will so happen that people who are not even saying that they are building a digital bank, because they have the distribution, because they have the trust, because they will provide the service in the right manner, they will eventually start looking like that, and they will all surprise us. I think Sweta said this thrice, Something will be innovative, something will be customer centric, something. So there's no way to define it honestly, because it will be very different from what we have seen. But because in India rails are being created now, on top of these rails, new companies can be created faster. We all should be surprised by what we see after a few years in case of digital first financial services companies. Now, let's take examples of a few companies. Credit everyone has talked about a bit, so let's not talk about it. But these banks for kids, like, they're a very different entry point, right? No bank would ever think like, I want to build a bank for kids. But because you focus on a different entry point, and you focus on a very different customer base, you perhaps end up creating a bank eventually, and that might be unique. Credit cards for a particular segment, credit card for creators, credit card for women, credit card for kids, credit card for startups. Because you just started with a very unique and very sharp entry point, you end up servicing them so well that they end up coming to you for their use cases. And after a few years, it just seems like, this has become a bank. And that would happen almost surely. That does not mean banks will be displaced. Markets are expanding so fast. We don't have any penetration right now. Like I have stocks bought of all the large financial services bank companies in the country as well, because they will grow for sure. They are not going away anywhere. But new use cases will emerge with new customer segments that will clearly create markets, and after some time they will look like digital first financial services companies.
Great.
I totally agree with Pratik on this, saying that this is going to happen, and different entry point. I also feel that a lot of different way, the way we call it a digital bank, it could be actually from the vertical SaaS kind of approach as well. And then they actually become like a banking provider for a particular category. It could be for a restaurant, it could be like the way the toast we have seen, or it could be for a creator economy. And creator could not be the influencer on Instagram. Creator could be, because with Uber and Lyft and all the Olas and Grab, which we have seen, everybody wants to become entrepreneur themselves, right? So people would actually have a job very different than just going to office 9 to 5. They might be doing various jobs. So those are also solopreneur kind of so all of those can become a creator. So just going by the vertical SaaS and the fintechs will eventually can lead into digital bank kind of approach. So I totally feel that it's going to happen.
And I'll just add one more point, which I thought of which I remember right now. It's not that only fintechs are doing it, right? Syndicate Bank got created even when others existed because they solved a different problem. Vertical wise, Shriram Transport Finance got created, or Mahindra Finance got created because they went into a very different entry point and different use case. Again, I don't exactly know their starting points.
It makes sense.
But companies were created that way, and this is what new age companies are also doing, and there's nothing wrong with that.
Very much agree with both Sweta and Pratik as well. I think digital journeys are beginning right now. We are at inflection 2.0 for tech sector overall, not just fintech. I think, right? The COVID was a good, I would say, accelerator for people to move online. It was a natural accelerator for people to move even further online. I think demonetization was probably the first, and Geo launch was the first fintech, or I would say tech 1.0 inflection point in India, and now this is the second inflection point in India as well. I think globally, anyways, a lot of people are completely digital. In India, I think the digital journeys are picking up much faster, both on the B2B side and the B2C side, right? I think we have taken our first journey with Neo, right, as a first investment in the fund, and that's probably a 5 to 7 year call on where we see the market going in the next 5 to 7 years, right? And I think some of us are associated with Neo banks in some fashion or the other, right? It's not just about the name or the brand that they're creating, it's about the journey that they're creating of the customer, right? People want to do whole asset and liability management, take away from banks and do it themselves, right? At home, sitting at their doors, sitting at their convenience of their couch or their living room, right? They can do the entire life cycle journey management. How we are today probably ordering food, right? Or making payments for that matter. We want to move all of that online. I would never want to visit my bank for that matter, right? Not that they will not exist. They will create their own infrastructure. They will create their own niches, right? And they'll become the largest balance sheet providers. But fundamentally, consumer journeys will move online, both on the, as you rightly mentioned, on the real estate side, on the B2B businesses side, right? A lot of journeys in the businesses today, as Hitesh mentioned, on the trade finance side, is a paper-driven journey. None of these will be required with tokenization. None of these will be required with smart contracts. None of these will be required through distributed ledger systems, right? A lot of these will move online. Give a 10-year view. I think I see a lot more probably completely digital journeys. Now, whether you can call them neobank or digital banks, or you can call them digital platforms, whatever. But the journey of the consumer, the experience of the consumer, the use case of the consumer will be completely online. And we are extremely bullish about it, right? And we are definitely taking more bets in the space where you are controlling the entire customer experience and providing end-to-end the full stack service completely digital and completely online, right? And I think consumers are willing to pay for it. If there's a good product, if there's a good service, there's a good quality and good team building it, consumers will definitely pay for it. And we are seeing this happening across verticals for that matter. Hitesh,
any last words from you, Hitesh bhai?
No, I think if you see, couple of countries like, Hong Kong came out with virtual bank licenses, and now some of the virtual banks are already operating, right? StanChat, which is partnered with, other stakeholders and launched a, brand Mox in that market, right? They're already running a virtual bank there. So those things will kind of, happen. But I think larger part of the story is what do the customers want, right? I mean, so at the end of the day, there are customers who are still comfortable visiting branch, right? So, till the point in time, you have varied sets of customers, right? Those different forms will exist. And, going forward, what we are seeing is, companies like Apple, launching card, WhatsApp, we have now WhatsApp Pay, right? I mean, so those ecosystems, Google Pay. So all those, big techs have already ventured into some of the parts of the, financial services. The other consideration is also how much you want to get regulated, right? When you are offering financial services and dealing with the public money, I think there is a lot of responsibility which comes along with it. And how many of the, new age companies would be willing to take those responsibilities and, abide by, the certain set of regulations which you need to abide when you're dealing with public money. But yeah, having said that, Singapore also announced, right, digital bank framework. I think in India also there is a, paper which is being rolled out by, Niti Aayog, and there is a debate and discussion going on around it. So, we need to thoroughly examine that what is it will solve for a customer, which today a customer is not getting, right? As Pratik mentioned, and Sweta, and obviously Sagar also mentioned that, what are those problems, which are still not solved for. And if you are able to solve for those problems, you will find, adopters and takers for it. Just for the sake of, doing something, if you get into it, I think, it will fall like a pack of cards. So I think one is to really think through that. What are the use cases? What are the problems it will solve for? What ease of convenience it will bring in for the customers? And we believe that, those things will kind of, today also, when you talk about insurance companies, like we have companies like Echo, Digit, which are, let's say a digital insurance providers, right? I mean, to that extent. So I think there are players in the market who are already, doing it or working on it, and we will see more and more such, innovations which will, keep happening. So I mean, happy to be kind of, part of it, drive some of it, and we believe we are, all those things are inevitable.
Great. I think this is pretty interesting part, Hitesh, and I completely agree. Already something is happening, and we'll definitely see some of these happening over next few years. And the reason we all are here, we have 3 VCs and 1 corporate VC. So I'm sure all of you would invest in newer ventures and would drive forward the innovation that would sort of come forward from the country. So it was amazing to have all of you. Thank you so much for being amazing panelists. thank you so much. And with this, we would close today's session. And to all the audience who are listening, we'll start our session tomorrow morning with the, I think we are getting question, but it's already overshot the time. So I would not sort of, the question I'll repeat for your benefit. Would UPI completely take over all the other modes of payment like card, etc.? Do we see like they completely disappear in case of UPI? If somebody wants to take it. But that's the question. We already overshot the time. So I'll leave it to panel if somebody wants to take it.
I think it's a long conversation, right? That itself will probably take another 15-20 minutes. That UPI versus credit card versus debit card is a long debate we've probably all had. So maybe a separate conversation altogether.
Maybe we'll have separate promotion. Absolutely. Great having you guys. And audience, it was lovely having you guys, and we'll see you tomorrow morning.
Thank you so much.
Thanks everyone. Enjoy.
Thanks everyone. Bye.
Thank you.